Who else? Pardon? They are following online. Okay, that's good. Because some of them are abroad. I know the governor is outside the country. So probably is following and so forth. So we are all behind this vision which the Commissioner General was espousing a few moments ago. And I thank the members of the board for supporting the recent initiatives like the strategic plan. We have had to extend it by 2 years. And we are sure that if we can follow what we have said we want to do, you will see a better ZRA, a ZRA which generates more resources and which is friendlier to every taxpayer. That's the ZRA we want. So I would like to thank all of you. And with those few words, if there are few, I don't know, but I want to thank you for your attention. And I now declare the summit, the tax summit, the first Zambian tax summit officially open. And then we will listen to the various experts that have got some good ideas on what we can do to improve our performance. I thank you for your attention.
Another round of applause, ladies and gentlemen, for the board chairperson of the governing board of the Zambia Revenue Authority, Dr. Caleb Fundanga. And straight away, ladies and gentlemen, we will go into our plenary session, and our first plenary session is themed tax policy and economic growth. Our moderator is a strategic thinker, a writer, an economist, a financial analyst who has also served in various positions in different institutions, such as Standard Chartered Bank Group in Zambia, South Africa, Uganda, and he is currently with Zanaco. Please give a big welcome to Mr. Mutisunge Zulu, our moderator.
Thank you very much, and good morning, everyone. I don't feel the energy in the room for a summit. Good morning, everyone. Thank you, thank you. So, yeah, I'm very humbled to be here. So we'll go straight into business. So under the overarching theme for the 2025 Tax Summit, which is Solutions to Zambia's Challenges, Taxation as a Catalyst for Development, I welcome you to plenary session number 1, themed Tax Policy and Economic Growth. So I will be your moderator for this session. My name is Mutisunge Zulu, and I serve as Chief Risk Officer at Zanaco PLC. So to kickstart these deliberations, I will call the following on stage to help me propound the tax policy and economic growth session. So I'll be inviting Mr. Bonaventure Chinombwe, who is the Assistant Director for Budget Affairs in the Ministry of Finance and National Planning. You can give him a round of applause. We need some energy in the room. Thank you. Welcome, sir. Because tax is very close to the accountants, I will be inviting President of the Zambia Institute of Chartered Accountants, Mrs. Yande Siame Mwenye. A name that is synonymous to manufacturing in our market. You can't talk manufacturing without mentioning Mr. Ashu Saga, President of the Zambia Association of Manufacturers. I will invite Mr. Mbewe Kalikeka from the Zambia Institute of Policy Analysis and Research, ZIPA. Economic Policy Advocacy, the EAZ. I used to be National Secretary at some point. So Dr. Oswald Mungule, who's the president of the EAZ, will join us online. Could I have some confirmation that he's online? I can see screens. Thanks to technology. Welcome. You can give him a round of applause as well. The EAZ. I used to be national secretary. Okay, so Dr. Oswald Mungule, who we'll go straight into business. So welcome once again. Please feel at home. This is the first tax summit. As you heard Dr. Caleb Fundanga share in his opening remarks. So okay. We'll go straight into business. So welcome once again. I think please feel at home. Feedback. So we'll go straight into business. I started the preamble. So taxation is one of the ways that the government raises funding and finances. I'm getting feedback. I think the doc must mute his mic. That's where the feedback is coming from. Anyway, taxation is one of the ways that government does raise funding for its fiscal programs. And of course, that's got a bearing on the level of, say, government borrowing. And I think we're all well vested in that. But why taxation? Why fund fiscal programs? Obviously, it's for economic growth, to achieve aspects of social equity and fairness at the end of the day. And any changes in tax policy definitely has implications on economic growth, which we're trying to solution for, and the economic welfare of people. So with that said, I'll be starting with the Ministry of Finance. Where is the nexus between tax policy and economic growth? And maybe before we get into business of the day, just a few ground rules. I will be giving you 3 minutes each to share your pointers. So we'll start with Ministry of Finance.
Hello, okay. Thank you so much, moderator. I thank you so much for the question, and I wish to thank everyone who's here. So the question is, what is the nexus between tax policy and economic growth? So as you all know, tax policy is very critical to domestic resource mobilization. As a country, around 75% of our revenues come from taxes. So it is very, very critical. And studies have shown that an increase in tax revenues, for every 1% increase in tax revenues, there's a 0.3% increase in gross domestic product. So tax policy is a link. There's a serious link between tax policy and economic growth. Thanks.
Thank you. Thank you very much for that succinct response. I'll go straight to Mr. Ashu Saga. Mr. Saga, you heard that every unit increase in taxes does correspond to, is it 0.3, which is 30% GDP growth. So my question to you would be, are the current tax policies providing an enabling environment to spur growth? And this is a double-pronged question. Do we need to explore for more policy and legislative changes in our tax administration? I'd like to hear from you.
Okay, let me say this first. You've got a figure there that says so much increase in tax will give you so much tax increase in GDP. The problem we have, before I address this, is really most of us are not paying our taxes. And the informal economy is creating a big gap in allowing for that principle to be actualized. So when you say, are the policies creating an enabling environment? If all of us followed what is there, you would definitely see Zambia on a different platform. You have tax policies around tax incentives and tax holidays. And in the manufacturing sector especially, this has given avenues for growth. And I think if you've seen, even with the recent report, that was the first time that was published, was the tax expenditure report. It showed a correlation between incentives that created jobs and investment. So when we say you've got tax policies creating environment, yes. And I think we've got some decent policies in place, but we can do a lot more. Is there things that we can do on the enforcement side, which is probably the more important question, to ensure that the fairness in tax application creates that growth is probably our bigger problem. So when you talk about tax policy, you have tax policy, but then you also have curveballs. Recently, we've had, taxation that is introduced without proper consultation. And that was basically caught a lot of us unaware and has created constraints in planning. So while you have tax policy that is probably sufficient in some areas, we have to look at the aspect of applying it to everybody, right? Also, the issue of making sure that we have correct communication in terms of when taxes are being changed, right? If you want to look at, do we need to explore other policies and legislative changes? Definitely, right? I think if you look at what other countries are doing in terms of simplifying taxes, right, and simplifying how taxes are administered, yes, the smart invoicing system is probably one of the best things we've done in this, whole strategy. It has got problems, but can we do more to simplify how tax is collected? And that is a policy change, right? And these are things that I think we need to be very mindful of, is how do you make it more simplistic? Sometimes we're making it overcomplicated in how we collect taxes. So we have things like SI 110, which is a waiver on duties, which has helped the manufacturing sector. But we're also seeing, I think we're running the IMF program right now, right? There are constraints in what we can do. You look at the 2025 budget, not a single incentive was given. And a lot of it is to do, I think, with matching what you need to keep in terms of your parameters with the IMF program. So if we deal with this and create tax policy that is encourages further growth, but apply it across the board to those that should be paying, the informal sector as well, we will probably progress as a country. Smuggling is a big problem, right? So my point is, you have policy that will probably work. You have things that will do well in this country, for the country. But I think the enforcement side is what is creating the problem.
Thank you very much, Mr. Saga. And I'll move straight to Dr. Oswald Mungule, President of the Economic Association of Zambia. Dr. Mungule, you've heard from Mr. Saga that the people that are not paying tax, smart invoicing, is a latitude to do better. Constraints, we are on an IMF program. There's quite a lot that is not being done. So as an economic policy advocacy body, the EAZ, what do you propose as innovative solutions to address some of these tax hurdles and challenges?
Thank you so much for this summit. I think we would like to thank the Commissioner General and Chairman, Dr. Caleb Fundanga, for bringing up this dialogue. I think this is the first time, and I think we'll be looking forward to one next year. And coming to your question, there are so many issues, but we are able to identify a few as the Economics Association of Zambia. First of all, you see that about close to 97% of businesses in Zambia are micro and small, medium enterprises. And mainly in terms of employment, when they employ people, most of these MSMEs pay salaries in form of cash. And therefore, ZRA is unable to trace these payments. And so they are unable to collect most of these monies that have been exchanged. So that's one very, very important challenge. So the policy here is that the government needs to break this informality and therefore formalize the businesses in this country. And to do this, you don't have to government needs to provide some incentives so that, these MSMEs, start developing and then coming up with the solutions that will enable ZRA to collect taxes. Secondly, we need to have a comparative tax system that is very robust. By that, we mean that Zambia should always set our tax rates with the view of looking at how our neighbors are doing, because we're in a global environment, and everyone is attracting investments in their own jurisdictions. So if we don't set our tax rates appropriately, then it will be difficult for us to even talk about industrialization and rapid economic growth. So the economy will benefit from, for instance, lowering taxes. We've seen that countries that have lower tax rates, their tax systems are very stable as compared to those with higher tax rates, because then they'll be moving back and forth. They increase the tax, they bring it down, they increase the tax, they bring it down. That's a lot of instability in the economy and may not be helpful. So we need to optimize. Of course, it's difficult in view of the point one, where we have a lot of MSMEs who are operating, and it's difficult, therefore, to collect taxes. Then thirdly, stability and predictability is a very critical matter for tax administration. So here it's about frequent tax policy changes. I think we need to guard against that so that the macroeconomic environment is predictable from the fiscal point of view. And lastly, I think the Commissioner General and the chairman of the ZRA, they pointed to the fact that digital tax administration is on its way. So that's the way. What would distinguish ZRA from other institutions is the staff, the people they employ, and the facilities that they give them to be able to do their work in a much more efficient and more proactive manner. So learning from Kenya and the UK, Germany also, Zambia should also, quickly come up with these e-invoicing and real-time tax reporting. The technology is the key to the efficient operations at the ZRA. I submit.
Thank you very much, Dr. Mungule. I will be coming back to you at some point to still unpack the constraints that are linked to us being on an IMF program versus the incentives that you speak about. But before I go to Mrs. Yande Mwenye, I think what has really come out of Dr. Mungule's submission is technology, the e-invoices, real time, and all that speaks to technology, stability, and predictability, I think is a persistent and homogeneous theme I'm getting from all the panelists. Lower taxes, of course, everyone would like lower taxes, arguably, and a comparative tax system. So the question for you, Madam, would be that there has been sentiments around lack of clear tax policy goals, irregular changes in tax policies. I think we did hear Mr. Saga also talk about taxes without consultation in these same tax policies and laws, and overlapping taxation at both micro and macro levels. How can ZRA and government best identify approaches that can be utilized to achieve a simplified tax policy across all sectors? Over to you, ma'am.
Thank you very much. And just to commend ZRA for this forum, we are so grateful for this engagement. as has already been said, there are so many sentiments. And the point here is we're not saying taxes shouldn't be paid. Taxes should be paid by all means. But I remember beginning this year, first week of January, and there were so many text messages. I thought people were wishing me a Happy New Year. But people woke up to a shock. What are these taxes? Where did they come from? We've just come from budget and these things were not there. So what's going on? And as usual, Zika, you didn't tell us that these things were hidden. So it's sentiments such as that. People want to pay their taxes. Companies want to do the right thing. And we're coming out of, in fact, we're still in a very tough environment with the energy crisis last year, and then suddenly you have to do a bit more by way of taxes. Now, as Zika, we had done a study in 2023, I believe, and we looked at what are the tenets of a good tax system, which believe squarely fit into the 8th National Development Plan as well. So I'm just going to speak to a few things, which, thank you, they've been projected. So that is an overview, roughly, of what we did look at. Number one, a presumption to tax neutrality. Taxes should not distort economic decisions. So again, companies want to know. At the beginning of the year, they've done their budgets. What will the tax look like for this year? It's in their planning. The other one, again, openness and transparency. Taxes shouldn't be a secret. We all want to pay them. But what we find is we have organizations that are paying, and obviously the tax base needs to be widened. But it is the other ones, the ones that don't pay tax, that affects us good citizens. So we need to look at ways on how this net can be widened. We've seen it in the FIC report where we have this illicit flow of funds. How can we capture that and bring it into the fold? Thirdly, simplification and convenience. Tax shouldn't be complex. We've all had case studies and worked in developed countries where it's straightforward. You can easily compute your taxes. Again, certainty. We want to know, what is this tax? What is my obligation as a taxpayer? That shouldn't be a surprise. Accountability and regular review. What we do find is there are so many proposals that we've made as Zika where we're saying there should be tax reforms. We need to improve. As we embrace other things such as technology, we have tax online and very commendable, the smart invoicing. Yes, there are some challenges, but it's a good initiative. But in the same way, we need to constantly look at how we reform these policies so that everything is streamlined as we incorporate new things that are coming into play. Efficiency, I was glad to hear that, yes, now from February, we have more VAT refunds. That has been the cry of the businessman. They're saying this is affecting our cash flow. So happy to hear that and looking forward to see how this is going to unfold. Now, I'm going to pause there. The advance income tax. We believe as Zika, this is an administrative nightmare. The threshold is quite low, the $2,000, and we are hoping that this is something that will also be addressed as a matter of agency. The last point, again, is double taxation. So we find that companies are saying, but I've paid tax here, and then I'm here. Then there were these changes. So there's a threshold for turnover tax, 5 million. Then no, you also have to be VAT registered. It's a bit confusing. So just a bit of clarity there. But the emphasis is this. There is more that can be done. And as Zika, we are here to support, help streamline some of these policies, because we do believe with ZRA that taxes need to be paid, but people, organizations, companies need to know what they are paying. And the focus for incentives shouldn't just be on the mining sector. It should be broad-based. Thank you very much.
Thank you very much, ma'am. When I grow up, I want to be like you. 7 tenets of a good tax system: simplicity, neutrality, openness, certainty, accountability, efficiency, and no double taxation. And you also make mention of AIT as an administrative nightmare. So some takeaways there. Moving straight to Mr. Mbewe Kalikeka from ZIPA. So there's been times when ZRA and government at large have been criticized for tax holidays. Why are we giving these holidays or incentives? Do these incentives really enhance growth? Over to you.
Thanks, moderator, and thanks to ZRA for organizing this tax summit. So as a startup, when you look at tax incentives, you're basically deviating from the norms of standard taxation. So you're providing a tax holiday to a certain taxpayer. Now, there's been huge debate whether these tax incentives actually do incentivize economic growth or economic activity. But then I'll take you to 2 points we should look at. One is the norm that tax incentives do actually attract investment. Then the other side of the coin that we should look at is the revenue that's lost or the revenue foregone if you impose a tax incentive. So ZRA, of course, does administer quite a lot of tax incentives. I think through the corporate income tax, you've got differentiated tax rates depending on the sector that you're in. That's already a tax incentive. If you go through ZDA, they also provide tax holidays if you're operating in the multi-facility economic zones. But despite them offering these tax holidays or tax incentives, there have also been critics that have said these tax holidays or incentives actually just benefit the large foreign corporations rather than our domestic players because minimum requirements sometimes are high. But then if you look at the other side, which is the revenue lost or the revenue foregone, and I think as ZRA, this is their major objective, is to maximize revenue collection. And I would also ride on what the board chair said, Dr. Fundanga, when he was referring to the change in foreign policy for the US administration. Right now, President of US has done a lot of spending cuts. And as ZRA, as a nation, we should now be looking at to maximize revenue revenue collection. I shouldn't be quoted for saying we should overburden our citizens, but the revenue collection should be done in a very efficient manner. So I'll just take you to some studies that have been done looking at tax incentives. So, of course, if we go back to around 2011, there was a study that was done, and I just tried to quote the numbers so that we can look at some of the revenue losses that come with these tax incentives. So there was a study that was done in 2011, and it showed that just from customs tax incentives, Zambia was losing around 1.4 billion, which is equivalent to about 1.9% of GDP. Other studies have been done by the IMF, showed 0.8%, I think, in 2010 from just total tax expenditures. And then also from the institution that I come from, ZIPA, we did a study when the 2022 budget was announced, and we saw that around 4.6 billion was actually lost from tax incentives. So what am I trying to say is, administering these tax incentives, we should actually look at what is the cost-benefit analysis of these incentives. Does the investment actually outweigh the revenue loss, or is it the opposite? Are we losing as a nation in terms of revenue collection and not reaping out the benefits from these tax incentives? Now, if you delve deep into understanding some of the governance issues around the tax incentives, because already the numbers are showing as a nation we are losing revenue from the incentives. But of course, an incentive wouldn't be bad if the investment that's coming in is actually outweighing the loss. So some of the studies or some of the literature that's out there shows that some of these incentives are not done in a transparent manner. And I think my panelist from Zika, I think she referred to openness and transparency, which I would also write on, is sometimes there's no transparency in the way that these incentives are actually administered or put out there. Some of the issues come from the lobbying power of certain players in the sector because they've got so much lobbying power. I think in the past we've seen where even the mining firms, when there's a change in tax policy and it doesn't go in their favor, you hear to say, no, this mine has gone on care and maintenance, or they're laying down 100,000 workers, then government is forced to revert to its decision and the incentive is still put back. And then some of the other issues that has been there is that there's inconsistent application of some of these incentives. What do I mean here is that sometimes businesses maybe be given a 5-year tax holiday. They'll enjoy the 5-year tax holiday. Once it's done, they'll rebrand, record themselves a different name and continue enjoying the tax holiday. So in summary, or some of the proposals that have been put forward is we need to first strengthen the governance and transparency around these tax incentives. A fora like this, where a lot of brains have been caught, can also be caught when certain tax incentives are being put in place. I think one of my panelists was also saying this shouldn't just be applied to the mines, but also we should apply these tax incentives to businesses. That is, if the intended results will be reaped, would the intended investment outweigh the revenue loss? And then another point that I would stress, which will be my last point in terms of incentives, is I would urge Revenue Authority, can also write on ZIPA, being a research think tank, is to actually undertake a comprehensive study on some of these tax incentives. Because I think the latest information we have is the tax expenditure report, which was done by the Ministry of Finance in 2023. And we saw that about 8.6 billion kwacha, 1.5% of GDP, was actually lost in terms of tax incentives. But then now we need to go further and try and marry the investment that has been pledged through these tax incentives and see which one is outweighing the other, so that then we can constantly review some of these benefits as time goes. Thank you.
Thank you very much, Commissioner General. ZIPA has raised their hand and they will do a research for free for the ZRA. I didn't hear that part. But thank you so much, panelists. Ladies and gentlemen, we now have come to that part of the plenary discussion where we take questions from the audience. We will take 4 questions. Please tell us where you're from, and I can see Eric is ready, had his hand up. Where you're from, and you can ask your question. And you could also specify which panelist exactly you're targeting it to. I can see a hand from Eric.
Good morning. I am Eric Letier. I'm the representative of the IMF here in Zambia. Thank you for a very interesting discussion. And thank you for ZRA to organize this summit. I mean, you know, I think there were really good points made, and I think it's important to step back a bit, right? Like, when you look at the source of government revenues, you know, there's mainly 3 main sources, right? So you have your normal internal revenues, your tax, your non-tax, you have your access to your domestic market, your external market. At the moment, the access to the external market, unfortunately, is extremely limited because of the ongoing debt restructuring. And then the third source of revenue is the aid, any kind of, like, you know, external grants, concessional financing, and so on. On that aspect, you've seen the recent development, right? The optics are not looking very positive. So it's important here to focus on internal revenue. And, you know, when we look at our research at the IMF, you know, in Sub-Saharan Africa, usually across 80% of the government expenditure is covered by internal revenue, right? So this is by far your most important source of resource and the most stable. There's of course a lot of variation there, but it shouldn't take away from the fact that internal resource is and should be your priority. And here, I fully agree with everyone. Tax compliance is an issue. It should improve, and compliance should go faster. But let me just, reframe a bit the discussion about tax exemption. I mean, it's not really, about the fact that you cannot grant tax exemption because you're on an IMF program. I mean, there is a commitment made by the government on this, but it's not about the IMF program. It's about good tax policies. I think here you have, of course, to strike the right balance between, bringing more tax revenues, have an attractive tax regime for both domestic and foreign investments, but also ensure that you have the necessary revenues to invest in public investments and the priority, spending that the government needs to do. In fact, when you look at research, and that was one of the very good points made by Mbere from ZRA, when you look at global evidence on investment decision from foreign investors, tax incentives, tax exemption can help attract investment, but they're by far not the first item on the list. What's much more important is infrastructure, is the investment climate, it's the market opportunities, is your judiciary system, how protected my investment is, and so on. That's much more important than tax incentive. At the same time, as I was mentioning earlier, investors look at the infrastructure in the economy. How do you build infrastructure if you keep giving tax incentive and foregone, basically are unable to raise enough revenue, right? I think there's been a lot of, tax incentive that have been granted in the past. And right now the work is more about understanding fully the amount of tax incentive that have been granted, right? So that's part of the good work that the government is trying to do with the tax expenditure report, and they should continue on this, right? But you need to first understand how many of those have been granted. Then how much do they cost in terms of foregone revenues, right? And whether they're effective or not, right? I mean, I think this is what you should do before granting more, right? Because otherwise, this is just like, the Sisyphean well, when you have this like ever leaking buckets, and you're not actually looking at, what's inside that bucket first and trying to plug the holes. So I think, this is important to kind of like put in this context. But, and, also echoing the very good point from ZRA about the fact that the kind of, expected spillover that are always announced around big tax incentive, job created, investments, growth. When we look at the IMF at, global evidence around this, it tells a very different pictures. Like they are not that effective, and actually like only a fraction of those jobs and growth usually materialize, right? So it's very important to assess here in Zambia, and that's a very good suggestion from ZRA, whether, all the promise from the past actually materialized before you grant more tax exemption, because repeating that same issue and you erode your tax base, right? Now, last point. Tax exemptions, can be useful, but increasing revenue much more important. And it's not, again, because you're on an IMF program, it's for Zambia to be able to first, have the adequate spending for investment priorities, education, infrastructure, and so on. Second, service your debt. Remember, your debt restructuring, we're getting to an end, 90% has been restructured, but it's not forgiven, right? So you need the revenue to service that debt. There is at the IMF this tool that we use, the debt sustainability analysis tool. We assessed the debt of Zambia as sustainable during our last review in December, all right? So but that assessment is on a forward-looking basis, and it assumes that Zambia stays below certain threshold in terms of revenue to debt service ratio, for example, right? So that revenue to debt service ratio is at 14%. And when you look at the projections that are based on your revenue projection, you're not very far from that line. So you don't want to grant even more and more and more tax exemptions that will impact your capacity to raise more revenue, right? But I think we need to take a step back, first look at what has been granted, whether it's effective or not, and then decide on which one should be kept and which one should not. And then, of course, work on more tax collection and improving tax collection within ZRA.
Thank you very much, Eric. I see response.
Yeah, new response.
Please go ahead.
You see, when you have an answer or a perspective like that, it's you must consider, have you given what you had already? Now, when you look at tax incentives and you look at investment, tax expenditure report of 2023, right? And you look at an exemption foregone 8.6 billion in Kwacha, but corresponding investment of almost $10 billion, corresponding jobs of almost 45,000 jobs. But when you look at tax incentives, we shouldn't be so short-sighted to say, what did you achieve by giving this? My question is, did you give what you already had? No. So when you bring investment into the country, and you must also understand where Zambia lies in terms of its investment cycle, in terms of an industrialized nation, right? So when you go and say, look, no, did we give tax incentives, and before we decide to give more, we should get a position. But the position also is, was that 9.8 billion in investment there? No. Was that 45,000 jobs that probably creates another 150, $200 million in spending in the economy there? No. So when you move to a principle of consumptive tax, which I believe ZRA wants to move to, the idea is to create more people in employment, right? So when we say, we pass a judgment to say, no, we must not give more tax incentives, but did we have that investment before? And would we have had it anyway if we didn't give those tax incentives? When we look at it, and even from an investment profile, it is also very important. And we agree, it's not the most important maybe on your list, but it has contributed. And to dilute it down to say, no, maybe, you know, is it really playing a role, would be the wrong approach. So when we go with an approach of, did we actually have that investment? And is the investment probably as a result, and we've seen that it is probably as a result to some extent of reinvestment and investment in the country. So to isolate it and try and water it down, I think would be very ill-advised. In our maturity of an economy, right? Some mature economies, maybe you'd see that it's not it's not really an attractive point. But again, did we tax incentive? So be it.
Thank you very much for the response. Would you like to respond, ma'am?
Yes, maybe just to add on. So to agree with my colleague, Mr. Saga, I think the issue is not that incentives shouldn't be there. They should be there because when we look at it long term, yes, we're going to bring this investment into the country. We're then going to have taxes that we're going to be able to earn. But I wanted to add another dynamic. We are offering all these incentives to the multinationals, to the mines. What about our own MSMEs? What are we offering them? That is my big issue. So again, I'll go to last year and even this year, we're still seeing the challenges, and the elephant in the room is the energy crisis. What are we doing? In the budget last year, there were pronouncements of the credit guarantee scheme from the MSME. And we do know that this category, our local investors, it's very hard for them to access financing. And in this room, including yourself, moderator, from the bank, it's hard for them to come and get a loan to finance their business. So as we look at the multinationals, what about our own local investors? Because the growth of this country depends on them. They are in the manufacturing sector, they're in the agriculture sector, even at the artisanal miners. What can we offer them as well? Thank you.
Thank you very much. There was a hand behind there. Before I come to you, let me start with the gentleman at the far end.
Okay, thank you. Our name's Suzio Kamanga, representing Deloitte and Touche. So my question goes to the president of ZRA. This is just regarding the tenets of a good tax system and how we're reconciling that with the prevailing situation. So the first thing I want to highlight is the property transfer tax changes that were recently introduced away from what was announced in the budget. I want to just get your comment on how such administrative and legal changes sit well with the tenet of transparency and, most importantly, certainty. And also issues to do with advanced income tax, which should be administrative in this nature. I believe a good tax system should be administratively sound and easy to adhere to. So how do you reconcile our current system in Zambia in terms of the tax system and what is currently prevailing vis-a-vis the PTT changes and admin issues on AIT? Thank you.
Thank you so much. Before you can answer, ma'am, in the spirit of efficiency, I will get the hand. Yes, sir.
Thank you very much. My name is Patrick Mawire from the ZRA Tax Committee. We want to thank the ZRA for arranging this forum. Quick comment, moderator. This conversation is about tax policy and economic growth, and I think we seem to be stuck on incentives. Unfortunately, incentives are great, but they are not the only tools for economic growth. If you look at, for example, the National Development Plan, it talks about industrialization and diversification and an industrialized and diversified economy. I can point you to numerous portions in our tax system that directly contradict that objective. So for example, you look at one of the objectives of diversification, we could say we have a youthful population, young people who could do very well in business process outsourcing, you know, call centers and so on. But what we have, the VAT Act says place of supply rules, the service provided in Zambia is taxable. There's no way somebody is providing a service to somebody in the UK and they are paying VAT in Zambia. Makes no sense. It's all those inconsistencies. If you look at, for example, our R&D, our act still refers to experiments like it's secondary school. Other jurisdictions talk about research and development. Our act still penalizes creativity, research, not of a capital nature. For tax experts here who might understand that language, it's retrogressive. So you don't need incentives. Sometimes all you need is just a level play with the nations that we are competing with, you know, so that we can attract that much needed investment. This needs to be a lengthier conversation. Incentives are part of it, but just these inconsistencies that contradict the very objectives of our National Development Plan need to be sorted out. Thank you.
Thank you so much. Would you like to respond to the question? And thanks, Mr. Mawire, for your contribution.
Thank you very much. So that is Suzio from Deloitte and Touche. I wasn't quite sure what you were getting at, and I get that you're an accountant. So your question was on, is it transparency around transfer pricing and the advance income tax? Is that it?
Yes.
Sorry, just to
Property
clarify.
transfer tax, sorry. So on property transfer tax, I wasn't sure or clear on what your question is. Are you saying, is it transparency in the process with regards to ZRA? Could you just elaborate on that?
Thank you for that. This is coming from the guidance that you had given and comments regarding what a good tax system should be. And amongst the tenets that was highlighted, one of them was transparency and certainty. We did go through the budget last year where changes that were envisaged to be implemented January 2025 were elaborated. And safe to say, none related to any changes in the taxation on the transfer of property, I'll say in particular shares. So when we see a change come 1st January 2025, revising these rates from an amount that wasn't earlier elaborated, how does this sit with your, how does this currently sit with the guidance you've given on what the good tax system is and what's currently prevailing here in Zambia, especially with regards to this issue? What's your comment on that, and how best do you believe this can be addressed? Most importantly, to help not only the taxpayers at large, but even for planning purposes for industries in the economy. Thank you.
Thank you very much. So you're talking about property transfer tax, the revision to the rate. Yeah. Okay, so that's an easy one. As I earlier said, we just need there to be clarity and engagement. There are various stakeholders, including ourselves as ZICA, and it would have been nice for us to have been engaged before getting a New Year's Day surprise that this has happened. So by all means, we advocate transparency. It needs to be open. There has to be open dialogue with all stakeholders. Because if we are going to be paying taxes, we need to know how much we are paying, when we are paying, what rate we are paying in advance. And as you would appreciate, every company, at least, or organization has a budgeting cycle. So they plan ahead. This is how their cash flows are going to be used, and this includes taxes. The overarching principle is that we all agree that taxes need to be paid, but we want to know what are these taxes that we are paying. Thank you.
Thank you very much, ma'am. Mr. Bonaventure, I believe you would like to add.
Yes, moderator, thank you. So maybe just to weigh in on the issue of transparency in taxation, specifically the issue of the additional measures that were introduced away from the budget speech. I think I agree totally with Zika and the rest of everyone that we need to do more in terms of transparency. As you know, when the budget is presented, the speech in Parliament, it's a proposal that the minister gives out. So it's a proposal, and then there are all those processes that it has to go through for the budget to be approved. And so you may know there's some measures that are dropped, some measures are brought in. For instance, we all know the famous, in the budget speech, it was announced that we'd introduced a 10% excise tax on betting. I think in Parliament, it was then dropped after those committee meetings. So there are all those processes that go on, but I do agree that we need to be more transparent. I think we should just find a way of making sure that stakeholders know rather than getting an unpleasant New Year's Day surprise. Thanks.
Thank you very much. So in the spirit of gender balance, I have not had
Mr. Moderator, I'm thinking you won't see me from here, but
yes, please, but in the spirit of gender transparency as well, I would like a question from a lady from the audience. We don't seem to have any. Okay, then maybe we can take your question. But before we take your question, I think a follow-up question to the previous responses would be, what then would be the reason why taxes that were not communicated or agreed be sneaked in? I think that seems to be the elephant in the room. If this is a summit, we're walking out of here with answers. So I'm not sure whether I should be asking that question to you, sir, or I should be forwarding it to commission. No. Anyway, let's take your question. We'll come back to the elephant in the room, please.
yes, thank you very much. My name is Francis Mirambo. I'm an accountant by profession. I would like to start by saying, first of all, that, you know, once upon a time, the men in white coats used to have all the answers. Unfortunately, that's not the case nowadays. So I'd have loved to see that chair at the end reserved for a common man from the streets. Then you would understand the problems we have around taxation that a good number of our citizens don't really understand. We talk about managing the burden on the citizens. From an economic view, when you earn an income, there are two things you most likely do. You consume or you invest. Now, if you look at the taxes that we have in Zambia, very punitive. First of all, you pay at 7.5%. What remains with you, we get a further 16% from you through VAT. What this means is literally you have almost about 50% of your pay remaining with you. In that 50%, in a salary which is already low for most people, you have to eat. You have to survive in that. So what do you have left to invest? So you cannot talk about economic growth if citizens have nothing to invest. And this is why we are always talking about foreign direct investment, because our citizens are investment incapable. So what do you need to do? First of all, create a base of citizens that can and should invest. How? Ensure that your taxes are very fair and not punitive. Secondly, if you are going to give incentives to the mines, are you calculating what's the extra that you are making from that? I think that we are giving these incentives. Are we tracking them? If you give an incentive this year, by December, you should be able to say, what are we benefiting from it? What has been the trade-off here, and has it given us a benefit? If not, you go back to the drawing board. What I'm seeing here is a situation where we give these incentives, we're not tracking them, and we keep saying, oh, this will help us get to these tons and this profitability and that. Are we getting there, and are we collecting those taxes? I think that's very important. Now, I have to insist that if we are going to have conversations that lead, in terms of tax conversations that lead to development in this nation, we must widen the tax base, but lower the taxes per individual. It's crazy that some people have to pay so much and some people are paying almost nothing. Let's widen the base, lower the taxes to allow the citizens to consume, but have something left to invest. That way, we'll have local-driven development. And that's what I think most of us here want as citizens. Thank you very much.
Thank you very much. Would you like to respond, Mr. Saga?
I think, it goes back to simplicity, and I think the comment is a very fair comment that has been made. We must understand one thing. The higher the tax, the higher the incentive to evade, right? And the higher the problem, the bigger the problem that's existing in the country. When we look at importation, high taxes, you look at even on VAT, you find that the incentive to evade becomes higher. Even with the new taxes on rental tax, 16.5% on top line, 8% on property transfer tax, the limitations that are there, you find that people will want to break or bend the rules. So, going back to what has been said, it's very valid in that you need to balance and bring down to a taxation level that is acceptable and drives growth. Maybe 16% is not the right VAT rate that we should be charging, because most of it is ending up in refund, a lot of it. We might come to 14 and lower the tax burden on the consumer, and also have solved part of our refund problem. So I think we need to start talking about what are the things that we need to do while we widen the tax base. We should also be looking at why are people not paying their taxes? And the bottom line, if you look at it, is the incentive to evade is high. The incentive, when you have a high tax rate, the incentive to evade is high. And that's something I think is a basic policy change that we must be looking at in the next 3 to 5 years, is how do you adjust that and bring it so, yes, what he has said, the disposable income changes, the ability to invest changes, the ability to consume, which I think when we all realize moving to consumption taxes in the medium to long term is probably a better tax administration system for this country. So very valid what has been said.
Thank you, Mr. Saga.
Sorry, I'll just weigh in on that. I was thinking about my own parents. My father is in his 80s. And so I was telling him, no, now the rental tax has gone up, because as a retiree, other than depending on his very small pension, he gets rental income. And he said, Yes, he understands these things because he was a technocrat, retired. And he said, but is there no incentive for retirees? Should we continue paying the same taxes? And I did say, you know what? I'll have to ask that question. So those are some of the issues, picking up from my brother Francis. What are the incentives? The taxpayers that are already paying continue to be squeezed. Like my father in his 80s, is that fair? How then can we widen this tax base? And some of the questions that have been asked, sometimes it's not that the people in the informal sector don't want to pay, but they don't understand. There is a question between tipping. People don't know what tipping is, but they've been told now to have a bank account, you need that. You have to be a registered taxpayer. And then there was a question again, beginning of January, is this tax clearance certificates? Was it intended to identify active taxpayers, or it's a compliance tool? And what I remember myself is it was for the identification of active taxpayers. But suddenly, first week of January, people were not able to order imports. As we know, we are a country that imports largely most of our consumables. School fees couldn't be paid because someone needed a tax clearance certificate. So as we look at addressing some of these policies, could we just look at how well things can be streamlined? Again, transparency. We heard syntax has been removed. Nobody needed to really be consulted. The multinationals complained. But what about these other taxes? What about these other policies that are not working for the local Zambian SME? Thank you.
Thank you, ma'am. Everything has to come to an end at some point. So we come to the end of this first plenary session, but under a minute for each one of you. Summary recommendations. I'll start with you, sir. Under a minute.
Thanks. Maybe just to reemphasize the importance of tax administration with tax policy. You know, we cannot afford to separate these two. A good tax policy is always compensated by a good tax administration. And therefore, the Ministry of Finance, that's our goal. We work together with the Zambia Revenue Authority just to ensure that the policies work with that good tax administration. Thank you, Chair.
Thank you so much, ma'am.
Thank you. We need to pay our taxes. That is not a question. As we look at Vision 2030, we want prudent use of our resources. We continue to have incentives for the SMEs, and there needs to be a lot of transparency, accountability, and a very good administration, one-stop shop for all investors, local and international. Thank you.
Thank you. Mr. Saga.
Okay, in terms of, I think what we need to come out from here is, one, I think the need to build further capacity at ZRA on the enforcement and implementation side is very, very key, whether it involves restructuring or, some sort of enhancement at ZRA to make them do what they need to do. I don't think we're so much at loggerheads in terms of policy, but I think in terms of giving ZRA the tools and the capacity to implement, I think is where we need to be striving to go. The second thing also is in terms of policy direction and transparency over the next 3 to 5 years, because anything in business and in terms of investment has that kind of time horizon. Instead of having, I think, budgets that talk to policy on a year-to-year horizon, we need to start seeing tax policy being implemented over what's going to happen in the next 3 to 5 years. So my example here is the minister may be constrained in this current fiscal year to say, I can give you this incentive. But what I will do is in the next 2 to 5 years is progressively do this. And that allows for a new window for investment and a new window on tax planning and how you're going to do things. Lastly, again, very important, what we need to come out of from here is how you're going to incorporate the informal sector. right? I don't think we really have a plan. We are hoping that smart invoicing will solve this problem, and I assure you it's not going to. We need to actually come up with a plan that allows for us to bring the informal sector so that the tax burden is spread, the tax base is spread, and we can now allow for us to spend and not be constrained on spending in the government budget because the money is out there. We're just not bringing it into the treasury, right? When you look at the informal economy, when we look at our GDP figures, they're probably understated vastly. What goes on in the formal economy needs to be taxed. And at fair, reasonable, minimal rate probably to understand the needs of the people and the SMEs and MSMEs. So I hope that we can work on these three fronts, right, going forward, in terms of really laying a foundation on tax, on the implementation side, the policy side, and the informal sector side. So that would be what I'd like to see.
Thank you so much. And you, sir?
Yep. Thanks. I think for me, my point that I want to emphasize is tax incentives, of course, are not a bad thing, but I think the conversation around the room, and I think I liked the last contribution from, I've forgotten, but my brother in a white shirt, is we need to broaden the tax base. So how do we broaden the tax base? Is we need to capture more taxpayers and bring them onto the taxpayer register so that we don't squeeze or overburden the citizens. So basically what we are crying for, what we are appealing is we need to constantly review these incentives. We need to put in sunset clauses. We need to be doing a year-in-year review so that we see, are these incentives actually bring out the intended benefit? So basically we can actually even put measurable incentives on a year-to-year basis. We say, okay, this sector was given these incentives and they promised to bring in this amount of investment. Has this been achieved? So that we run away from the issues of misuse, corruption, like I mentioned, others just basically rebrand, change the name and the like. So incentives are not a bad thing, but I think we need to be reviewing them constantly so that we don't keep overburdening our citizens. We're already, I think the IMF rep, Eric, was already referring to that we are back on paying back our debt service is back. And if we continue giving incentives without getting the intended benefit in terms of investment, which we intend to say will tax the investment, we are going to go back in the situation that we've been and start again talking about debt restructuring, of which we are trying to come out of. So I think, moderator, those would be my closing remarks. Thank you.
Thank you very much. 4 takeaways under 30 seconds. Good tax administration, number 1. Let's pay our taxes, number 2. Enforceability, build capacity within ZRA and the right tools. Let's incorporate the informal sector, and tax incentives is not the solution. Let us broaden the tax base. I will get under a minute, Dr. Mungule. Your summary?
Thank you, moderator, for that. Yeah, in summary form, I think I can just ride on the area sentiments raised, but just to add is that the key issue, the fundamental principle is that we need to increase revenue collection. That's the bottom line going forward, because we have bills to pay as a country. So that's fundamental. Now, how do we raise revenue, more revenue, so that we can meet our bills? Is through what colleagues have pointed out. Modernization at ZRA is very key. That should be P1. Look at ZRA and modernize it. Train staff, and then P2 should be on the tax policy issues. Clean come up with reforms to make sure that we reduce the informalization of businesses in Zambia. You remember I said the majority of businesses in Zambia are MSMEs. So formalize those SMEs so that now we can collect more taxes. So tax policy should be inward looking, not focusing on external or big corporations. Look inward, and that's the only way we can grow the SMEs, we can increase on business activities from which ZRA or government will get their revenue from. So that's what I can say.
Thank you very much, panelists, audience. It's been great discourse. We've come to the end of the first plenary discussion, and I would thank you once again. Cheers.
A big hand once again, ladies and gentlemen, for our panelists. Thank you so much for ably bringing to the fore various points regarding tax policy and economic growth. I'd like to thank you so much. And as an institution, we want to continue on this path. Your recommendations as well have been taken note. We have a secretariat that is really taking note of these submissions. And at the end of the day, the Zambia Revenue Authority, or probably before the end of the quarter, we will publish the report, which will be also shared to the stakeholders in the spirit of transparency, so that we continue on the path of discourse. We will go straight into the second plenary session, and this is quite an interesting one. There were comments that bordered on the mining sector, and therefore we will move to the plenary session discussing taxation and the mining sector. Ladies and gentlemen, our moderator for this session is the head of the School of Mines at the University of Zambia. He is an engineer. He's also been the head of department for the Australian Western School of Mines. And I would like to invite you to please give a big welcome to Professor Emmanuel Chanda, our moderator.
Good morning, ladies and gentlemen, and welcome to session or plenary session number 2, which is on tax policy in the mining sector. Now, we all agree that the mining industry contributes significantly to the revenue of the national treasury in this country. But we have a conundrum. On one hand, we have assertions from various stakeholders that the country is yet to benefit more from this sector. And then on the other hand, you have mining investors and mining companies who equally want a fair deal in terms of taxation of their industry. So they are looking for good tax policies. So in this session, we are going to navigate how the country can optimize revenue from the mining sector, and then ensure that there is a fair play for the industry. So we are going to focus on policy, legislation, and ways in which we can optimize the tax revenue from the industry, but also balancing that with the requirements of the mining sector. So at this point, please allow me to introduce the panelists for this session. First on is Mr. Joseph Nonde. Mr. Joseph Nonde, if you could please join the stage. So Mr. Nonde is the ZRA Commissioner, Domestic Taxes. Please welcome. Next is Mr. Joseph Mwansa. Mr. Joseph Mwansa, please make your way to the platform. Mr. Mwansa is a Federation of Small Scale Miners Association of Zambia, representing them. Third is Mr. Ian Mwinga. Mr. Mwinga, if you could please make your way to the platform. Okay, Mr. Mwinga is here. Thank you. So Mr. Mwinga is Country Coordinator, Extractive Industries Transparent Initiative, that many of you are aware of. And then we have Mr. Chilembo, Mr. Sokwani Chilembo, who is the CEO of the Chamber of Mines. Welcome, Mr. Chilembo. And then finally, or lastly but not the least, we have Mr. Isaac Mwaipopo. Mr. Mwaipopo, if you can make your way to the platform. Mr. Mwaipopo is Executive Director, Center for Trade Policy and Development, or CTPD. Please, once again, extend a warm welcome to the panelists for this session. So let's get into the discussion. My first question goes to Mr. Ian Mwinga. Now, we know that Zambia Extractive Industries Transparency Initiative does a lot of work in this country in the mining sector. The question is, in your opinion, regarding the taxation of extractive industries, what do you think are the opportunities and risks? Mr. Mwinga.
Thank you so much for the question. And I think for us, from the EITI perspective, our thinking is that we need to begin to think beyond just merely taxation. And I think looking around in terms of the mining landscape and also the petroleum and also the gas industries across the world, a lot of the countries are actually thinking beyond what taxes can actually offer the jurisdictions. And here I'm actually talking about situations where, as a country, we need to begin to think of other instruments. For example, sovereign wealth funds. How do we apply the money that is actually coming from the mining sector to make it actually multiply even beyond taxes? You may wish to know that even countries that we actually look up to in terms of mining, you look at Norway, even Chile, most of these countries actually have a fund which is being employed in one way or the other. Now, the sovereign wealth funds typically will not be looking at just the money itself that you bank away. It could be a way of, for example, you could actually be looking at an infrastructure strategy where the proceeds from the mining sector are actually used to develop very key and strategic infrastructure that then can be used to actually spur development in the economy. The other bit could be, you look at skills. The mining sector could be used as a catalyst to develop strategic skills for the future. Now, if you remember, the world is talking about artificial intelligence. We've seen billions of dollars being deployed in this space. So this could be one of the things that the mining sector for Zambia could begin to think in terms of crowding in skills in the sector and also churning out skills that could be used, to actually further development for the future. Just quickly as well, moderator, just to mention that the tax system in the mining sector in Zambia has actually been quite uncertain for a long time. We have seen, for example, was it just last month, where we had an introduction of an export duty on gemstones. And a few weeks later, that was reversed. And I think it also goes to show, to emphasize the points that were raised earlier in the earlier panel around certainty and stability, because these companies plan long-term. If we are going to have taxes coming up in December, for that matter, I think that is very disruptive. I'll leave it at that for now, moderator. Thank you.
Thank you for that response. I think the point we take from your comment is that the tax system in this country for the mining sector needs to be more stable. That point is taken. I think the government is trying their best to stabilize the tax system in that sector, but we are here to discuss how we can just improve on what's happening at the moment. Let me turn my attention to Chilembo. Now, Mr. Chilembo, you represent the chamber, and as the Chamber of Mines of Zambia, what policy measures are needed to address taxation of the mining sector and reach a point where all stakeholders are satisfied with what will be in practice?
Hello? Yeah, all right. Thank you very much, Professor. I think the first thing that we need to do is correct the misconception. The primary misconception is the use of this word incentive. And that misunderstanding is why production stood where it has for as long as I've been alive, which is about 50 years. And the simple reason for this is that we've been uncompetitive. Different reasons at different times, but presently the primary reason has been the policy instability, which drives up your cost of capital. The second reason has been a high average effective tax rate, which makes you lose investment dollars to other destinations. And basically, the third reason has been around, if you like, weak regulation and administration. At this juncture, we must commend the ZRA for the work they've been doing in expanding the tax net in the mining sector. We're seeing a lot of significant players who never used to appear on the mineral production reporting data appearing as a result of the work that they've been doing, extending the net and improving their efficiencies through their back office optimizations, support from GIZ, USAID, and the like. And it is significant because if you look at last year, as an industry, we knew we would come in maximum within chamber at a high single digit production growth. But the difference has really come from the additional efforts of the ZRA. So there's lots of opportunity there while we correct the structural issues that are required for us to attract capital and grow the sector organically. While that is going on, there is opportunity to bridge that period with operational improvements from the ZRA and other regulators. We hope your co-regulators will come to the party, because when they do, then we will also see less damage to the environment and greater compliance across the country that will lead to even a reduction of the strain on infrastructure, because taxes will be able to go back, maintain them. But that was the accolade. I think it was last year during the budget review sessions when the Minister of Finance actually complained that everybody who's traditionally there to berate him for problems was, giving him accolades, and it was embarrassing. And as an industry, we assured him that when the ball was dropped, we would raise that point. So if we're talking stability, January surprises are not the best. And I think we saw two that caused some consternation within the sector. One has been corrected, and I think the second has been alluded to in by another speaker. The second point is around property transfer tax. That increment on mining license transactions and the shares of the companies that hold them was not necessary. The challenge that we are facing is that I think on the regulatory side, we are looking at things in a zero-sum fashion. I think Mr. Sagar effectively alluded to the same. And what that does is you lead yourselves to miss very low-hanging fruit. what could have been done instead around this property transfer tax in an environment where those who are highly compliant, like our members, and if we, we are really commending the ZRA for spreading the pain because it's been sitting with us. And yes, miners like to be audited, but it's never a joy. So please, a risk-based model will assist us. I think your efforts would be best served going after the smaller fish who don't comply. But as regards the property transfer tax, for several years prior to this one, we had been submitting a proposal for what's called a flow-through share scheme. This is where exploration companies, small-scale miners would cede equity in exchange for assigning their expenses to an investor, such as a retiree. I think the president of ZICA talked about incentivization for retirees. Here's one. This way, you would be able to mobilize capital into exploration and small-scale mining locally and expedite the rate of coverage of the country for growth of reserves and also restoration of order. Gold will not be formalized without such a structure in place, because if you are going to link artisanal miners to any kind of formal structure, you will need them to have access to capital. And when this is done locally, it also expedites the rate at which exploration will come in. 5 years of presenting this, 4 years of no appearance at the Tax Policy Review Committee. This lapse this year was an unavoidable misstep, and we would strongly urge that if other wings of government have difficulty making these R&D investments, certainly the hiring of a consultant to explore this option is highly necessary because there's an additional benefit. If you encourage dual listings through such a mechanism as well, you will finally link the Zambian capital markets to what is going on in the global mining markets. Right now, we are exporting capital gains by allowing listed companies to go raise their capital offshore while we are not correlating in any way with it locally. So there's a bit of hard work to be done there. We would urge the ZRA to consider doing this heavy lifting on behalf of the rest of government if there is no will, because without it, we will have a very hard time in growing our reserves and attracting capital into the country at a pace that will match with our ambitions. We need $200 million a year in exploration, without which the 3 million ton goal will take us far longer than it should. So really for us, those are the key points. A little bit more forward-looking analyses for organic growth. And I think in terms of competitiveness, if the PTT can be reversed for miners and license transactions, we'll see enough churn for there to be organic growth as opposed to now where it will suppress the rate of investment into the sector. Thank you.
Thank you very much, Mr. Chilembo. You touched on a number of things there, but my take from your comment is that we need to grow the industry. We need to facilitate growth of the industry. In that way, we can increase the benefits to the country. You also touched on compliance issues. So we don't want the tax system to ignore some taxpayers and focus on others. We want a system that motivates everyone to be compliant. Thank you for that comment. I will now move on to Mr. Mwansa. So we have an emerging sector within the mining sector, which is the small-scale miners of Zambia. What does the federation you represent propose as a way of harnessing taxation opportunities in extractive industry?
Thank you, Mr. Moderator. My name is Fabian Chewe. I'm representing Mr. Mwansa, the President of the Federation. I'm standing in as Information and Publicity Secretary for the Federation. Yes, one of the things that we need to understand right from the outset or from the start is that the small-scale miners in Zambia have been in existence since time immemorial when mining started in Zambia. The challenge we have faced is, number one, the aspect of formalization to ensure that these mines are given the recognition and are able to access capital, able to access finance for them to operate profitably. I think the House may wish to know that 96% of license holders of small-scale miners are those that predominantly are below the annual income of 800,000 kwacha per year. Only 4% are large-scale miners. So meaning that if we're talking about the small-scale miners, predominantly, most of those are actually in the lower income brackets for a number of reasons. Because of, number one, low capitalization. I've always given this example that when you talk of mining sector, you have FISIP that support the agricultural sector, and there's a fund deliberately put by government to ensure that those who are actually doing agriculture are able to be supported by FISIP, but there is no corresponding assistance given to the mining sector in terms of those small-scale miners. The last time this was done was probably in 2000 under the European Union when there was a 40 million euro loan that was extended to Zambia. And much of that money, 3/4 was spent on just training, and the other amount of money was returned to government. So in terms of the small-scale miners, I think they did not benefit much in terms of that funding. So for us to have a good tax system, we are looking at the people that currently are in the lower earning bracket, and for them to be able to contribute maximally to the growth of the mining sector, there's need to provide incentives. I know the issue of incentives has been talked about, pro and against, but what I'm talking about, number one, is ensure that we provide the cheaper capital, cheaper funding. Banks in Zambia are not able to lend for a number of reasons. Yes, mining is a risk business. We all know that. But what is more important that there must be deliberate policy to upskill this sector. What government can do is that they can look at computing what are called mining rights. Every mine, if as long as the mine is viable and able to compute the mining rights, it means that mine can be invested in. So the aspect of looking at the risk of these being risk averse and we cannot invest in them, it defeats the whole purpose of growing the sector. So a number of issues need to be done. And one of those is to ensure that we capitalize the mining, the small-scale miners, by ensuring that there is a deliberate funding or a deliberate, mechanism by government to create a fund that can go towards uplifting the small-scale miners. Recently, there was an introduction of 15% tax, which people have talked about on export of gemstone. Now, if you look, let me just put it in perspective. You're talking about 96% of the small-scale miners who hold these licenses are below 800,000 annual income. If you are to add a 15% on already 10% they are paying, it was going to move to 25%. That meant the industry was going to be buried for life. So it requires that government moves in quickly to evade some of these challenges that the mining sector is facing. And we applaud government on the effort of ensuring that they are to remove the 15% tax, which was not going to go anywhere in terms of a system to collect revenue from this sector, because predominantly they are in the economic doldrum where they cannot actually make money. So for us to have a very effective tax system, what we require that the small scale mining sector requires incentives. For today, yes, we'll not be able to pay that kind of money that is required or the taxes that are required, but given the investment in this sector, a continuous investment, a deliberate policy by government to invest in the sector, we expect this sector to move forward in the foreseeable future. Maybe for now I can say that.
Thank you very much, Mr. Chue. I apologize for referring to you as Mr. Mwansa, but we appreciate your contributions here. Yes, so this sector is vital to the development of this country. And the point I take from your contribution is that the sector does need incentives. And maybe a special tax system for the sector or some other means of assisting the sector is the way to go. But this is another industry that we need to grow. It has got huge potential, but we need to balance how it's taxed in relation to its contribution to the economy. Now let's move on to Mr. Nonde. What are the practical approaches that the Zambia Revenue Authority has put in place to achieve an optimal tax compliance by the large mining companies and the small and artisanal mining players? Thank you.
Well, thank you very much, moderator. I think in talking to the transformation and the issues that we've done as the tax authority, I just want to take a step back and indicate that we've recognized the importance of the mining sector and the mining activities in relation to revenue collection, because most of the revenues that we get in this economy come from these players, because mining is the mainstay of the economy. So for us, from the tax administration point of view, we've done a transformation that recognizes this fact. So we have now set up a specialized mining tax department dedicated purely to ensuring that all the mining activities are taken care of and are supported. Now, the mining activities of modern times are very different from the mining that was happening in years and the 80s, where you had selected big mining companies that were the major players. So we've seen a prevalence of a lot of artisanal mining, and most of this is happening almost in all other provinces. So what we've done as a tax authority is to ensure that we set up ourselves in such a way that we can provide adequate service to each of these categories of mining entities. So for the large taxpayers, we've set up a mining unit under this specialized mining department, which deals with all the mining entities, including the large contract mining entities, because most of these mining enterprises that we have now are doing contract mining. And we also have large processors that don't have mining mines and they don't have the mining licenses, but they buy the minerals within. So those, we support them and ensure that they help contribute to compliance. So what we've done is that we've decided to appoint these large mining entities as withholding mineral royalty agents. We recognize them as the aggregators to which the small, the medium, and all the artisanal miners sell to. So instead of us following all these artisanal miners, we've ensured that we engage these aggregators where they are selling to, and this has helped us. Of course, there's a lot more that we can do, and we are getting the data as well from these big mining entities to ensure that we do the analysis. Now, beyond this, we've also looked at certain reforms and activities that support the small and artisanal miners. If you know, in terms of the policy, the requirement for the payment of taxes for their small and artisanal miners is a simplified tax system. So in other words, these smaller mining entities do not pay the same taxes that the large taxpayers need to pay. For instance, they're supposed to pay a 4% presumptive tax. Of course, that presumptive tax is determined after the deduction of the mineral royalty. Now, this simplification in itself means that when you are verifying their records as a tax authority, you are not going to go full swing as if you are going to a large mining entity. So for the artisanal and small mining entities, our focus is to do more on education, making them understand the tax obligations that they have, because most of them might not understand those obligations. And we've also ensured that we work on simplifying how they can relate with the tax authority. We know that most of them might be in an environment where they might not even be able to file the returns in the normal way that they should, do using the tax online system we use. So for them, we've introduced simplified tax online processing activities for payment and filing on the tax on phone. They can use a phone to to file a return, they can use the tax on app. So such simplification is something that has come out of our sort of changing the approach of having a targeted focus on them. So we're looking at supporting them, ensuring that they can comply with these requirements by educating them and showing them how easy it is for them to do the filing. Now, lastly, some of the things that we've done is to recognize that for us to get the taxes paid from the mining sector, there are a lot of players in the mineral value chain. So our role, therefore, as the tax authority has been opting to collaborate with other players in the mineral value chain. So we're currently working with the Ministry of Mines and Minerals Development to ensure that we support the arrangements that are coming in place. I think all of us know here that gold is being mined everywhere else, and we know what policy government is taking now, ensuring that we create the gold marketing centers to encourage the sale of gold within the country. So what we've done as the tax authorities to support that mechanism and work along with the Ministry of Mines and Minerals Development in supporting the setting up of the Minerals Regulation Commission. But besides that, ensuring that we also partner with all other agencies that are participating in the mineral value chain. So where it comes to enforcement, where there seems to be a bigger weakness in trying to understand who is mining where and who is doing what, we are also collaborating with agencies, other law enforcement agencies, be it ZNS, be it the Zambia Army, so that we work together with them so that we encourage compliance. I think these reforms that we've done as a tax authority are aimed at bringing on board those who initially were not included, so that we don't just focus on a few mining entities, but to start looking at everyone else who is handling the resource that we have as a country to have a fair share of paying the taxes. And as a tax authority, we've now positioned ourselves to ensure that we do that.
Thank you very much, Mr. Nande. It's good to hear those developments at ZRA, specialized in mining unit to deal with small-scale miners and implementation of those reforms. And also, I think you made a good point there that ZRA needs to collaborate with the Ministry of Mines to formalize these guys, because if you don't know where mining is taking place, it's impossible to impose even a fair tax. So I think those are good developments, including, I like the idea of education, as was mentioned in the previous session. It may be that some of the stakeholders from this sector don't know much about what's happening. So education is the way to go to make them understand their responsibilities and procedures and the things that they need to do. So thank you so much for that contribution. Mr. Mwaipopo, let me turn my attention to you now. What do you propose should be the role of the civil society in achieving transparency and accountability in domestic revenue mobilization from the mining sector?
Thank you so much for that. Well, with regards to the civil society organizations, there are quite a number of ways through which they help to promote transparency and accountability within the mining sector, as well as the broad agenda around domestic resource mobilization. One of the ways is through advocacy, and that advocacy is for disclosure of information. And this information might be speaking to issues around beneficial ownership. It also be speaking to issues around the taxes that these mining companies might be paying to the government or to the jurisdiction through which they are operating from. And these could include local authorities. But within this same process, we also get to convene meetings of this nature to discuss issues pertaining to mining and taxation, and would ride on reports that would be coming through from institutions like the Extractive Industry Transparency Initiative, Publish What You Pay, as well as research that would be done from within the civil society and other credible institutions. The second way through which civil society organizations contribute towards promoting transparency and accountability is through advocacy for routine audits. And these are audits that are conducted by institutions like the Zambia Revenue Authority, but in some instances, these are audits that are conducted in partnerships with other entities. It could be the Office of the Auditor General. And in looking at these audits, we are particularly interested in things around illicit financial flows, issues around transfer pricing, and just examining the extent to which mining companies are contributing a fair share towards taxation. Another way through which we contribute is through the push for enforcement regulations in terms of queries that might emerge that relate to taxation. We have seen in more recent times that the Zambia Revenue Authority has also become a lot more aggressive in terms of taking a litigation route with regards to some of the issues related to VAT, smuggling. These are ways that we equally support because ultimately we do believe that all taxes that are meant to support our development agenda should be brought in. There are other ways through which we contribute, which includes research. ZIPA had spoken to that well here. And these are studies that are done from within to look at issues such as double taxation agreement, investment treaties, and the extent to which some of the incentives that are provided, especially for some of these investment opportunities that we're trying to create, let's say through multi-facility economic zones. So we try to interrogate some of those and provide recommendations to government in terms of improvements that can be made. You might be interested to note that in more recent times, we've also been looking at some of the initiatives that government is undertaking, such as the recently launched target to raise production to 3 million metric tons. So a question from the civil society is that, well, the target may be very clear in terms of how much we want to be producing in the next 6 years. The big question is, what is the target with regards to benefits that we envisage to be getting from such a high target that we are aiming for? Because it should not just be an issue of creating an enabling environment so that there's expedition in terms of extracting our minerals. We should also be clear in terms of what we envisage to benefit when the production targets goes to 3 million. So these are some of the things that we are pushing for. But at the community level, we also noticed that during the process of setting up mining investments, there are several commitments that investors make to these communities as they consult them. But in many cases, these are commitments and promises that are just made in meetings. They never get to be tabulated through documents, which you can even use to litigate, assuming that a mining investor goes the other way. So one of the things we've been championing more recently is the need for communities and investors to be getting into what we call community development agreements. If you're setting up an investment, you're promising to build schools, you're promising to build a modern town, besides the contribution that you're making through taxes, let's put it on paper. Let there be people that can sign so that ultimately, if you do not fulfill, the community can have an obligation to even drag you to court, litigate, and get to derive the benefits out of the resources that are being exploited, extracted from these communities, especially now that we have the energy transition and the demand for minerals, especially critical minerals, is on high. It would be very important that we are also clear in terms of how we are positioning ourselves to derive meaningful benefits. Thank you.
Thank you very much. I can see that there is a role for civil society, and so we appreciate the work your organizations are doing, working with all the government authorities and other stakeholders and the constituency you represent to make sure we have a robust and balanced mining sector. So thank you very much. Well, I think I've made my running comments after each presentation or comment. So I would just like to invite the audience to thank our panels for this session. So now we move on to the question time, Q&A. So please introduce yourself, where you're coming from or your affiliation, and then ask the question. You could direct the question to a specific panelist here so that we can move very quickly. So Q&A. Okay, let's start with the lady here.
Okay, my name's Natasha Chansa. I'm coming from BDO. And my question is directed to the Director or Commissioner, Domestic Taxes, and the last speaker, Mr. Isaac. I think my concern is around our mining policy. We are just looking to collect taxes now, but what of the future? What are we doing about that? I think Mr. Mwinga mentioned a bit on sovereignty wealth plan. So I want to find out from your offices, what are we doing about that with regards to Zambia? Because I can give an example of Norway with the way they've done their policies around the oil mining. So could we have something similar here in Zambia with the minerals that we have, since they are depleting minerals? Thank you.
Thank you. Could we have a response?
Well, thank you very much. I think the question was what we're doing with the taxes we're getting. I think I would start by indicating that it's obvious that the contribution from the mining sector in terms of taxes contribute to the budget. And if you follow the line in which the budget is structured, that's the main spending instrument for the government. So everything that the government is doing, okay, it's coming from the resources that are being generated domestically. So the domestic revenue mobilization that the government is driving comes from the contributions that the tax authority has been making. And obviously, currently, as we speak, all the initiatives, be it hospitals, infrastructure, free education, all those, that's where the expenditure is going. My take, probably I might not be the right person to comment on the expenditure side of things, but my take is that if we collect additional revenues or more revenues than the government can spend, the government should be able to save. And when we talk of government saving resources and dedicating into a sovereign fund and anywhere else, it has to come from the income that the government makes. And that income is the taxes that it gets. And as the case is now, much of that, close to 50% or so of the revenues are coming from, in fact, up to 70% is coming probably from the mining sector. So that is what is driving the economy in terms of expenditure. But of course, more can be done if the government is able to raise more resources from the taxes. Thank you.
Thank you. All right, I thought there was another hand here. Okay, I'll get back to this side. Let's have the lady behind the camera there.
Okay. Hello, my name is Wendy Kodambo from Deloitte. And my question or comment is on stability, certainty, and basically compliance. So the mining sector being a key area of the economy, we tend to have a lot of audits in this area and a lot of tax issues touching on the area. But has the ZRA, and my question really is to the commissioner, yes, so has the ZRA thought about policies such as advanced pricing agreements where the taxpayers can then agree on some of these issues beforehand, given the materiality of the issues? I'm aware that the administrative measures to this regard, but in terms of having this in the legislation, is it something that we're already thinking about? Yeah, so that is it. Thank you.
Thank you for the question. So let's have a response. Was that directed at ZRA Commission?
Well, thank you for that question, which speaks to stability. Maybe in trying to answer that, I want to say this, that we've recognized the importance of us resetting the relationship with our large taxpayers. And large taxpayers in this context includes not only mining entities, but also non-mining entities. So what we decided to do is to come up with a program that creates predictability in terms of how we interact and treat each other. So we've come up with a program called cooperative compliance. Now, what this mechanism entails is that we sit and agree with the entity in terms of expectations, the levels of compliance, the internal controls that are put in the processes and so forth. And if we're happy that the company itself has got enough internal controls to control risks that will expose the company to additional payment of taxes and so forth, or compliance issues, then we can then commit to that company that what we'll be doing going forward is that we'll do specific audits on specifically scheduled timelines and on specific issues, and agree that certain issues will not look at them for a certain period of time and so forth. But for this to happen, each party has to give up something. There's assurance that a company needs to give. Now, coming to transfer pricing, I think as the case is, we take it that international taxation is critical in environment where we are, because the investment in the mining sector is foreign direct investment driven. And because of that, it means that most of the payments will continue happening between related parties, because most of these mining enterprises that are operating in the country do not have head offices here. The head offices are outside, and they've got a lot of sister companies outside. So there will be intercompany transactions. So transfer pricing is an important call for us. We need to check on that. Now, the proposal which is being given is whether we are considering advance price agreements. In other words, trying to agree in advance how we're going to treat certain features or transactions that these companies will be engaging in on an international basis. I think that's something that we're considering we can do going forward. Okay, but obviously we must admit that we need to build capacity for us to get to that level where we agree that certain activities can be done in that manner. But just moderator quickly, I want to say that since most of these multinationals, especially in the mining sector, have had some transfer pricing audit, we know, okay, some of the things that, or transactions that they've done, and they have a feel of what the tax authorities' view has been. So maybe that will be a starting point for us, so that we agree in advance how such transactions will be treated going forward. So that's a good suggestion, and it's something we are considering in the background as it relates to creating stability on how certain transactions on the international level will be treated for tax purposes. So we'll look at that, and it will fall into the cooperative compliance arrangement that we are putting in place.
Thank you. All right, the lead here.
Thank you very much. My name is Bona Kashinga, Landsworth Development Limited. I was hoping there would be someone from the policy side of mining, but maybe anyone can take the question. Two quick ones. There has been discussion about a supplier development program for the mining sector, which would go towards local content rules. I think the last was that would be worked on by the World Bank. There's been rather silence on the issue. Would any of the panelists or members in the audience from either the World Bank or the policy side know where that is and what we expect the closeout dates? Minister of Mines, I think, committed himself at the Cape Town Indaba that the local content rules are coming. What's happening with the supply development plan? The second question, around whether there is a possibility on policy emerging that would bring clarity on mining M phases and special economic zones. I think tendency on the ground is that specific mines apply for M phase status for locations where they want to be able to put investments perhaps beyond the mine rights area. What then happens is that suppliers who are outside of those zones, even by just a few meters or outside the beacon picked area, are not included, and yet they are actually facing the same economic realities. It would be good to be able to have a defined geographical area around the mine that is either a special economic zone, and any player within those beacon picked area is operating within that M phase, and it makes the ease of doing business and the predictability of M phases something that can enable people to plan. A comment on that. Thank you.
Okay, well, let's have a comment from any panelists. Mr. Chilembo.
Yeah, thank you very much for that question from Landworth. Yes, Landworth. Yeah, they're actually related questions. I'll start with your second question first. When you go into doing local content, it is not charity. It is being done to take advantage of competitive advantages that you have within the immediate vicinity or the jurisdiction, which exist within the mining value chain, normally on the input side. So that is what will determine the mix and location of those enterprises that will be able to set up shop either in the immediate vicinity of the mine, in the immediate, which we call local, or in the province or in the country. And the whole point of this is that they can do so profitably. And because it's being done locally, it improves the competitiveness of the overall sector. You'll hear the focus being on value addition. Value addition in terms of either a service, be it a consulting service, be it a contracting service, a maintenance service, or manufacture, as is done by the ZAM membership. The emphasis on these is because key catalytic outputs of mining is job creation. And it is these areas in the value chain that deliver that, which takes us on to your question around the supplier development program. Now, when this is done correctly, it's called mining, engineering, and technical services sector can actually transition from being a purely local entity to actually becoming a big part of your non-traditional export base. It's something that is seen when you have policy stability and then consequent growth. You look at the countries in South America, you look at Australia, you look at Canada, METS is a significant proportion of their exports. That's the long-term goal. So when you come back now to supplier development, I think from the policy side, they give you the timelines. But what I can share with you is some of the inputs that came from the World Bank's presentation of what's called the Critical Minerals Roadmap in terms of the requirements, the enablers to building a sustainable supplier development base. If you don't do it right, one small change and it goes away. That is why the Copper Belt went into distress when we lost the mining sector in the nationalization era, and there were no alternative markets. Now there are alternative markets. So if you do it right, you'll even be able to sell across the border. So it is not just by edict. If you need a full ecosystem, you need financiers who are willing to provide working capital instruments to existing players. You need business development service providers who are able to assist according to the target supplier companies need. If they're technically competent and they're not good at business, you give them a business development professional. If they are not technically competent, but they have entrepreneurial skill, you get them a technocrat to assist them to develop their product and make it competitive. This is what we've seen done in Botswana. And I think that's why you've heard about engagements between the government and the UNDP to replicate such a program here. So the issues that were pointed out by the World Bank were wide, because it is not simply the creation of a reservation scheme that makes this a success. In fact, if you go the other way, what you might see is an increase in cost in those areas where the reservation is applying and there is no competitive benefit. That will only benefit a few people and not create jobs. So for this to be done correctly, there is a wide range of matters that must be addressed. So much so, in fact, that it has been the industry's view for some time that fine, mining can be the guinea pig, but because of the range of complexities that are required to make this a success, not least of which is beyond just the issue of working capital. If your structural analysis of the sector shows you things that are missing, for example, work was done under the Africa Development Bank that identified that as a nation, we've lost the skill to do precision casting, and so we can't make pump parts. To go into that area, you need a different form of finance. You need risk capital. Unfortunately, we don't have DBZ anymore. We only have the CEEC. Without those key elements, you may not find that your development program is delivering success as it should. And given that breadth of issues, perhaps, not perhaps, definitely, a separate local content act is required that will stipulate all these ecosystem elements. Like I said, mining can be the guinea pig, and from that experience, you bolt on other areas in which you want to replicate the same sorts of success. So this is the mining industry's point of view, and we are all for local content because it improves competitiveness. And this is where innovation comes from, which even further improves the competitiveness of a local industry. So that's where we are. We are just urging that a thorough job be done, because if it's not, and it's cosmetic, we may not see the job creation that we are looking for. Thank you.
Thank you for that comprehensive response. I'm afraid, ladies and gentlemen, we have to wind up. My mandate was to get the audience to ask 4 questions. So let's move on to the final part of this session. I'm going to ask each panel member to give a recommendation as to the way forward regarding the tax policy in the mining sector. So let me start with Mr. Mwinga. What would be your recommendation or recommendations?
Thank you very much, moderator. I think for us, from the EITI perspective, we will start with the auditing of the MOSES, the Mineral Output Statistics Evaluation System, because we believe that having credible data from the mining sector will also help the ZRA to actually plan in terms of who to tax and how much to actually tax. The other thing, moderator, that we are seeing is the development of special purpose vehicles. There's a proposition in the mining sector that there will be an SPV. Also, IDC has signed an MOU with a trading hub. So our thinking is that the ZRA needs to be anticipatory in terms of value that will be created from those instruments. And it will be important that you actually, move ahead of the curve in that regard. The other thing, moderator, I think it's really a point around local content, which is very crucial. I wish to also extend the comment to look at local value addition in terms of access to cathodes. in this country, if you want to buy cathodes, where can you actually buy them from? So we have a policy as a country to be able to make sure that cathodes, which are inputs into your manufacturing, are actually available. We have companies that are coming on stream, and we are hoping that also the policy side is going to respond to make sure that our small processing manufacturing plants also have access in terms of these inputs. Quickly also, moderator, is the aspect of the labor in the mining sector. I think we ought also to look at the role of the trade institutions. The artisans in the mining sector actually are needed much more than your high-level skills. Therefore, I think there ought to be a deliberate move to have these skills rebuilt in the mining sector so that we actually Zambianize the mining sector, have the money that is created from the mining sector actually being spent within the mining sector. Finally, it's the issue around the aerial geophysical survey. We are, as a country, there's an aerial geophysical survey that is actually being undertaken. And I believe for ZRA also, this is an area that you may need to actually begin to look at a revenue potential. How is that data that is coming out from that process going to be monetized for the company, for the country? And also, we've seen from the EITI that companies are actually reporting on emissions. In other jurisdictions, you have the monetization of emissions from these entities. I could go on and on, but for now, I'll leave it at that. Thank you.
Thank you very much. Those recommendations noted. Mr. Chilembo, what would be your recommendations?
Yeah. First, I know there are hard conversations, but please don't get tired of talking to us. We know you don't get tired of auditing us, but please don't get tired of talking to us. The Tax Policy Review Committee has been 4 years. And some of the proposals we've talked about here, like I said, the flow-through share mechanism, we've been submitting for 4 years. And it's really critical that we begin to, or we maintain a conversation, because while the structural changes are being made to reduce the perception of risk in the country by keeping policy stable, to reduce the average effective tax rate for competitiveness with regional players like South Africa, who are also a source of significant capital and the sort of technical skill, world-beating technical skill in deep mining, which we will need to take advantage of the results of the Copperbelt aerial survey you heard Mr. Mwinga allude to. I think you all saw the handover of that data by the CEO of First Quantum a few weeks ago. While these things are being done, the operational improvements that are happening now in expanding the tax net, the pace must increase. And if the other arms of government are not able to do the necessary R&D, please, ZRA, step into the gap. And as regards value addition, there is a definite need for a little bit more rigor to be applied to the root causes of why it has not proliferated in the country. I know that it's always put down to the commercial terms of access to cathode, as Mr. Mwinga has said. But if we're going to become a very competitive node in this area, are we competitive on all fronts in the cost profile? Is energy as affordable? What is the cost to port, etc.? I think the ZRA could do this. And it is of interest to the sector because people who make these investments are also very, very active co-financiers of new mines. This is the case in the Congo, and there's no reason it should not be happening here. It's just perhaps the ZRA needs to take the lead in elucidating a way forward on these points. Thank you.
Thank you very much. Let's move on to Mr. Nonde. ZRA is in the firing line.
Yeah, thank you very much. And a lot of issues have been said. So maybe my first recommendation is an appeal that all the players in the mining sector, okay, need to pay a fair share, like the board share indicated. It's important. And for us as Zambia Revenue Authority, we stand ready to ensure that we support the needs of each of in there. So I want to appeal as a recommendation that the associations for the artisanal and small miners should come forward, and we work together with them so that we can educate and provide adequate information, which is readily available to the small and artisanal miners, so that as they continue operating, they are made aware of the obligations that they have. And lastly, moderator, I want to encourage all the players in the mining sector to ensure that they get the tax clearance certificate, because this will continue being with us as a measure of compliance. Thank you very much.
Thank you. Mr. Chibwa?
I thought you said Mr. Chairman. To be not Chibu. Yeah, so my last concluding remarks, number one, first of all, you cannot squeeze juice from a dry lemon. You can only get it from a thriving tree that is well watered and has nutrition. So that goes with our sector. I think our sector predominantly has not had much in terms of funding. A number of issues were spoken about by my colleague on the left side. He talked about the sovereign wealth funds, which are not in the country at the moment. In terms of formation of that, we're still in its infancy. At one time, the government had proposed, I do recall some years back, the sinking fund, which was not even created to alleviate the suffering of the loans that we are shadowed with. But what is important is a deliberate policy by government to ensure that we advocate for a fund that will assist small-scale miners. I know ZRA as an open policy, as an open an arms to embrace and be able to work with you. And we are going to work with you to ensure that we educate the small-scale miners. They have all the information that is required. But what is important is to ensure that we also advocate for what I call variable, tax. Currently, as we are speaking right now, we are paying 6% in terms of mineral royalty tax. But if you look at the 96%, well, mine owners, not all of them, maybe a big chunk of them are not even paying that 6%. So if you recall very well, from the time we privatized the mines in the 1990s, under the development agreements we had with the government and the big mines, it was 0.6% that was actually levied to miners. Then it moved to 3%. In 2008, when there was a revisit of the Mines and Mineral Development Act, it came to 3%, and eventually in 2012 moved to 6%. Studies have shown that even when we moved to 6%, it was still a challenge for most of the miners to pay the 6% mineral royalty tax. So I'm advocating for the small-scale mine sector that probably we should have stayed at 3%, and not really jump to 6% before we even do a very thorough and comprehensive study to see how many people are able to be compliant with the new, the tax regime that was introduced. Others have also echoed the sentiment to say there must be predictability in the tax regime. We have seen the back and forth in the last 6 years. If you recall, the 15% tax on exports was introduced in 2018. Shortly, I think a year later, it was reversed. And then we saw again be introduced in 2024, which is just 5 years later. So there has been this back and forth, and then it has also been reversed. So I think there's need to engage the stakeholders, engage the people, do a research to find out how sustainable is this tax. We are happy that government has actually made a U-turn, and that's the way it's supposed to be when you have a listening government. But at the same time, let's ensure that before some of these measures are introduced, there is some kind of background information in terms of having a very comprehensive study, do a research and show to see whether this thing can work or it cannot work. And so in the final analysis, you find that we don't want to have a situation whereby the tax regime looks unpredictable. So there must be that predictability for us to hold as many investors as possible, because every country that has a stable tax regime is a preferred destination for investment. So let's look at that and see how we can move the country forward. Thank you.
Thank you very much. Mr. Mwaipopo?
Well, from the civil society, our recommendations, we have two recommendations. I think the first one is basically commending the Zambia Revenue Authority for some of the cases that they've litigated more recently, those that are related to fraud and tax evasion. So some of these cases that you've litigated have made our advocacy very easy. They've also gone a long way in terms of validating some of the concerns that we've been raising for a long time, that issues related to tax evasion remain a part of one of the challenges that developing countries like Zambia need to resolve within the extractive sector. So previously in our sector, we used to rely on reports that were done, like there was a report done by the Thabo Mbeki-led report on illicit financial flows, but there was another report that was dubbed as Unveiling the Curtain. I think the ZRA board chair was part of the authors of that report. But in many cases, referring to statistics that were captured in these reports, most of the players within the mining sector used to dismiss some of those reports. But now that we have precedents, court rulings from the Zambian jurisdiction that validate our concerns with regards to the existence of tax evasion within the sector, it actually goes a long way in terms of also promoting the need to ensure that routine audits should be done, which is my second recommendation. I think the Zambia Revenue Authority would need to step up on routine audits of key activities that are happening within the sector, and it should go beyond just conducting the audits. There should be a way of finding to package the information with regards to the outcomes of the audits. Some of the recent audits that you have done, the only information that the public has had was the commencement of the audit, but nobody knows at what point you would have concluded the audits, as well as what the outcomes of the audit would be. Of course, client information privilege in terms of who might be involved can be kept, but I think we can also learn something from the Financial Intelligence Center in terms of how it packages information for the benefit of the public as well as the other taxpayers. It does inspire confidence with regards to how you are approaching taxpayers across, be it individuals or corporate entities that might actually be involved in practices that would undermine our ability to mobilize resources domestically. Thank you.
Thank you very much. We have received obviously a wealth of recommendations that will be included in the report. On that note, I ask all of you colleagues to thank our panel for this session. It's my privilege now to hand over to the Director of Ceremonies. Thank you.
Another big hand, ladies and gentlemen, for the panel. Professor, I would also like to thank you so much for accepting the invitation to moderate the plenary session on taxation of the mining sector. I'd also like to thank our audience, which is online, and specifically also like to thank one of our followers of this tax summit, Mr. Tresford Chiwe Chama, who has already submitted a 9-page document submitting some of the issues that he thinks or probably should be taken on board by the Revenue Authority and government at large. So thank you so much, Mr. Tresford Chiwe Chama. Quickly, our last session, ladies and gentlemen, invited guests. We've heard sentiments regarding expansion of the tax base. And our moderator for this session is the first female Chief Executive Officer of First National Bank. She has over 26 years extensive experience. She has extensive experience in banking, that is both within and outside Zambia. Please do welcome with a big round of applause, Ms. Kapumpe Chola.
Good afternoon, ladies and gentlemen. Ooh, a little bit more. Good afternoon, ladies and gentlemen. Thank you, much better. I know I'm standing between all of us and lunch, but I think ours is, I guess, the crux of why we're here. Because I think with all the presentations and submissions and questions, it really is culminating into how do we widen the tax base. So the tax base in Zambia, and as is the case in most of sub-Saharan Africa, is extremely low. I mean, the statistics you will hear a little bit later on. And all the attempts to sort of increase tax revenue have really been focused on closing that taxation gap and really expanding the tax base. Now, consequently, the impact of any economic underperformance and expanding revenue targets really creates pressure on revenue collection. And whilst the task of collecting the revenue falls on Zambia Revenue Authority, the burden is felt by the few Zambian individuals, entities that continue to bear the brunt of paying the tax. Tax base expansion is therefore critical, or is a critical focus area for the Zambia Revenue Authority. And a key catalyst in this process is devising ways and systems of extending taxation to the informal sector. ZRA is therefore looking at having a more inclusive approach that will bring new taxpayers into the tax bracket while retaining the existing ones through building a culture of voluntary compliance. Now, I have the privilege this afternoon of being joined by a panel for us to discuss the challenges ZRA is experiencing in widening the tax base. I think I've heard it again from across the audience and everyone, most of the panelists, that we need to widen the tax base. I'm not sure I've heard yet how we will do it. So we're hoping that we'll get those recommendations before we end the day. We also need to deliberate on how we develop those innovative solutions, right, that are geared towards enhancing the tax base without discouraging economic activities. We also are going to discuss a few policy changes that would be needed to facilitate this expansion. So to discuss these elements, I will invite a panel to join me up here. Firstly, I will call upon Mr. Emmanuel Mbambiko. Mr. Mbambiko is the immediate past president of the Kitwe District Chamber of Commerce and Industry. He is here representing the Zambia Chamber. Welcome, Mr. Mbambiko. Please give him a hand. Next is Mr. Ikabongo Muya, who is a research fellow with ZIPA. Mr. Muya, please step up. Thank you. Please give him a hand. Thirdly, we'll have Mr. Richard Kapasa, who is ZRA Commissioner for Business Facilitation. Welcome, Mr. Kapasa. And then we will be joined by Mr. Anthony Munanda, who is from the African Tax Administration Forum. Welcome, sir. Last but not least, we'll be joined by Mr. Ernest Sigande, who is ZRA Commissioner Customs Service. Okay, so this is the panel for this last session. We will be looking for lots of participation, even as we proceed on to the end of the session. Welcome, gentlemen. I will start with Mr. Muya. As outlined in the session's objectives, this discussion brings to the fore policy changes needed to facilitate the expansion of the tax base. What are the gaps that have been identified in the current policies that make it easy for some sectors to remain outside of the tax bracket. And here I'm making more reference to the informal sector, which comprises mostly SMEs, as we know. And it's not to suggest that all SMEs are outside of the bracket, but we do know that there's quite a lot of activity going on out there, some of it at a medium to high value level, but it's still staying out of the tax bracket. What do we need to change?
Good afternoon, everybody. My name is Muyai Kabongo. Thank you very much for this opportunity. As ZIPA, we looked at the question and did a number of reviews. As you may know, Zambia's tax to GDP ratio over the past few years has averaged around 16%, which is almost the same as what we see around Africa. And also, we have seen that on a global scale for developing economies, we have about 25% tax to GDP ratio. Comparing to the developed nations, they boast about 40% of tax to GDP ratio. Therefore, this is just to say that we still have a lot to do in terms of catching up with the rest of the world. So there are a number of policy changes that I'll speak to. One of the key things that I'll mention, I think, I'll begin with the issues around the role of local authorities. I think at ZRA, much of what we have seen is much to do with the central system in which you are looking at, ZRA actually doing the work itself without actual touch from the local authorities. And one of the things that we want to advocate for is that we decentralize some of the tax administration management to the local authorities. This means that one of the things that we should do is to empower the local authorities, our councils, because they are actually, some studies have shown that some countries are using even tax agents to be able to collect on behalf of the tax authority. And I think that's a route that ZRA could also explore. Furthermore, of course, we know our councils may not have the capacity at the moment. We recommend that much could be done in ensuring that capacity is built around the local authorities, ensuring that they have the technical skill and operational skills that will enable them to be able to collect those taxes from the individuals in those particular localities. The second one actually is called to the question that you asked, Madam, which is, of course, the informal sector. What do we do about the informal sector? The informal sector is a major contributor, especially in terms of employment. I think the previous discussion, we saw that the informal sector is quite vital in terms of how much it employs. About 70%, according to some stats, are in the informal sector, especially agriculture. So we need to formalize the operations of the informal sector so that they are also part of the tax net, because much of what we have seen is that these remain untapped, meaning these are some of the areas in which we could actually bring on board some of those players from the informal sector so that we are able to get as much. The process of registration, I think, could be key, ensuring that each and every player in the informal sector has access to a tax register. I think they could, as you saw, ZRA has actually made it easy for you to open a bank account. For instance, you need to have your TIPIN, which is one of the things that will actually compel them to register for such things. Also, we feel that simplification of the tax models could develop a tiered tax structure in which, we have different categories of taxpayers. We have micro, medium, and small and medium enterprises. So you tier it up according to those categories so that we do not overburden those who have a low capacity to pay. Obviously, look at the elasticities and so on. Furthermore, we know that ZRA has been working with the public in terms of having these public awareness campaigns to educate the masses on the benefits of registering for taxes and also ensuring that they participate fully. Everyone pays a fair share. It's a good thing actually to ensure that these programs are encouraged so that people can come on board, especially those in the informal sector. Now, coming back to the issue that I talked about, the local authority. We have the local authority, which may have more information in terms of property taxes. And the ZRA is I think in terms of the ranking, would be considered at a high note. So the local authority would be able to interact with the players at a local level and know exactly what is happening. So in terms of issues around conducting, property evaluation, ensuring that people are paying the right amount of taxes or rates towards the property that they own and so on, I think the local authority could actually become very useful in that regard. I wouldn't want to repeat some of the things that were mentioned in the previous discussion, but maybe just run into some of the gaps that we have identified. Obviously, like I mentioned, I think central to my point is the fact that we have not seen much in terms of the enforcement registration of the informal sector, so that the taxation can also can bring them together into, can also bring them to the tax net. We haven't seen much in terms of the informal sector inclusion into the tax net. So we expect that that could actually be done, bring them on board so that they also participate. But again, the fear, of course, from many players has been that why should we introduce taxes, or why should we bring in people in the informal sector? These are people that are actually generating very low income. But we believe that it's not about, like we have proposed, it's not about how much it's not about you paying a tax, but actually how much we put those different categories that are accommodative for different categories of taxpayers. So we believe that these micro, for instance, the very small entrepreneurs in our economy could actually be given certain incentives that allow them to actually register. And finally, I know I have spoken too
I want
much.
to stop you on that very important point, because we'll come back. I know you've got quite a few more points. We will come back.
Yeah.
And I should have started with 3 minutes and I didn't. But just from that very important point, because I want to bring in Mr. Mbambiko, because you are talking about the informal sector. Now, against that submission, Mr. Mbambiko, about the informal sector, the enforcement of registration, the tiering of the informal sector, as a Chamber of Commerce and Industry, where most of the SMEs belong, I presume yours will mostly probably be registered, but we're talking about the whole wide net. What are we not getting right? What would Zaki propose as the way forward in moving towards enabling policy in relation to what the sector views as taxation challenges on the industry, in the informal sector, etc.?
Thank you very much, Madam Moderator. Let me just, I think, go through the theme which ZRA has set for us. The theme is better taxpayer services, optimized revenues. Now, that's the theme which is coming from ZRA. And I was thinking that we also, I think, need to set a theme as taxpayers. And then we can compare the two themes and see whether we can synchronize. And the theme that I came up here for the taxpayers is make it attractive for me to pay tax. Make it attractive for me to pay tax. That's the theme that is coming from the taxpayer. Now, let me attempt to be like a Baptist preacher by presenting 3 points on this occasion to address the question, Madam Moderator. The first one that I want to respond to or to address in making it attractive for me to pay tax, which is a theme for the taxpayer, we are saying the first point is what I've called the SSS, strategy versus structure. And what we're saying there as the taxpayers is saying, when we look at the strategy, which has been also presented to us in the paper, the strategy is talking about broadening the tax base and all those good things. When you look at the structure which ZRA has at the present moment is speaking a different story. Now, I listened to Chair Dr. Fundanga, and I listened to Commissioner General, and I also listened to Mr. Nonde here. There's a point which they made, which we can't ignore in their statements, and you can correct me just in case I overheard you. They are saying they are throwing more energy to the big taxpayers and a little energy to small taxpayers. There is a problem. We want to broaden the tax base, but in the meantime, we want to throw little energies to the small taxpayers. And I think, in my view, this is where we need to correct issues. And this is real because at the present moment, as a taxpayer in Kitwe, if you want to get some clarities on issues, unfortunately, you can't get it in Kitwe. You phone the Kitwe office will refer you to Lusaka. Lusaka, you have to phone around looking who should you contact in Lusaka. So you now become a journalist looking for someone at ZRA to give you the information. If you are lucky that day, you may get it. Otherwise, 2, 3, 4 days, you don't get the information. The next thing you may have to do is you may have to travel to Lusaka. So you either have to fly or you have to drive to just come and get some clarity. Now, we want to broaden the tax base, and yet we have these restrictions. Are we being real? I think my point is we need to ensure that structure speaks to strategy. We have our strategy to broaden. Let the structure equally speak to that strategy. In simple terms, I'm proposing that ZRA must immediately relook at their structure and ensure that they are present where we are, not in Lusaka. That's the first proposal. Look, Dr. Kotra says it in marketing. If you want to be successful in business, what do you have to do? You have to be near to your customer, isn't it? ZRA is running away from us. They are more into Lusaka than where we exist. That on its own, we are saying, is a problem. You need to immediately relook at your structure and come near to us. Zambia is not Lusaka. Zambia is bigger than Lusaka. Come to us. That's the first proposal. So if you want to increase the tax base, we are saying you need to come to us. That's structure versus strategy. The next point that I want to present is what I'm calling M and A. Ministry versus the authority. When I say ministry, I'm talking about Ministry of Finance. Now, you get a feeling that Ministry of Finance makes policy decisions. Those policy decisions are not passed through to the board. For the board to spend time to get them investigated, researched before they are implemented. Ministry of Finance makes the policies, and all they do is they throw them to ZRA, and they're picked up instantly for implementation. Not researched policies, and as a result, we're having to suffer the consequences of the January 1. We're having to suffer the consequences of the tax which has just been reversed. Now, that to me clearly communicates to me that ministry is having to just pass policies, and the board is not given opportunity to interface with management to do a research before that policy is implemented. And we are saying that on its own is a major problem. So how do we broaden the tax base? Currently, the policy which Ministry of Finance has passed, January 1 policy, which we've been talking about, suddenly what that has done is it is going to reduce the taxpayer base. How is it going to reduce the taxpayer base? Number one, we know that in all these years, ZRA has withheld tax for SMEs in the Copper Belt. And the SMEs suddenly have also been removed now from the 800 to about 5 million. The first thing, ZRA has withheld their tax. Secondly, ZRA comes and now slaps them with a 5% tax. First of all, these guys are owed the money by the government, and the government goes ahead and again slaps some additional tax to get even the little that they have. Now, that, in our view, is killing the SMEs. And we are recommending, I hope, just let me finish just for a second, it's very crucial. We are recommending that immediately, I know that this issue was discussed by others, but we didn't hit the nail on the head. We are recommending as a chamber that the policy which the ministry has made must immediately be reversed until they go to the working board and work at that policy so that the policy can then be well informed, not in the current form. In the current form, it's actually having to hinder, what we want to do. So we recommend immediately that the government must reverse what the January case is.
Thank you, Mr. Mbambiko. Immediately, Mr. Mbambiko says, but very important points, and I like your acronyms for everything. And so picking up on the first acronym, strategy versus structure, I shall come to Mr. Kapasa. We're talking strategy. Mr. Kapasa, on the 21st of January this year, the ZRA Commissioner General presented to the nation, and he spoke that only 0.9% or 983 individuals, entities of the 112,000 active taxpayer population contributes 80% of the contributed 80% of the gross revenue in 2024. Talking about strategy versus structure. What strategies does Zambia Revenue Authority have to expand the tax base? Only 80% of the nation's tax revenue last year.
Thank you so much, Madam Moderator, for the question. Indeed, we do agree that given the indicators that have been given, there is need to urgently expand the tax base. Before I speak to the strategies, let me just share, as at 2024, end of 2024, some of the numbers that we had on our tax register. For pay-as-you-earn, for example, we had on average 47,000 as employers who are meeting the pay-as-you-earn. VAT averaged 19 to 21,000, then corporate income tax, 34,000 taxpayers. These are on a lower side, as confirmed by even studies that have been done for the tax gap. So amongst the strategies that we are employing, firstly, in the last 3 years, our institution has transformed, and it continues to do so, to a data-driven tax administration. What this means is that we are leveraging data that is available to undertake our strategies. So the first strategy is to undertake the data matching initiatives. We do have a lot of data internally that is sitting on our core tax administration systems. If you look at customs, we have got the ASCUDA World system. For domestic taxes, we've got the tax online system. So we've undertaken initiatives where we check the data in the ASCUDA World system, compare it with our domestic taxes system. The results have shown high levels of non-compliance. People are importing, exporting, but when we check their registration in our tax base, in the tax online system, they are not there. That category of our stakeholders, we are engaging them so that we bring them onto our tax register. We've not just relied on the internal data, we've gone outside because there is a lot of data sitting with ministries, government agencies, private firms out there. So what we've done is utilize the data sharing arrangements, get this data, compare with the data that we have on our domestic taxes system, again, high levels of non-compliance. People are supplying goods and services to the government, they are getting paid, but they are not anywhere on the numbers that I was sharing. So it is that category that we've been engaging, following up, and sharing with our offices that are spread across the country so that we can bring them onto our tax register. Then we've gone a step further. We are fully implementing the fiscalization program through electronic invoicing, known as the smart invoice. This is saving a lot of purpose in addition to compliance, but also expanding our tax base. For us, the smart invoice is not just there for VAT or having people to utilize it. For us, it's the data. What is the data that we are now harvesting through smart invoice telling us? To a transaction, there are two people. Company A, for example, is selling, is using smart invoice. It's sold to company B, and company B is nowhere in our tax register. Through our data analytics capabilities, those are companies we are able now to identify and then engage them so that they register. Our efforts are not only focused on the companies that are within Zambia. We are looking at even non-residents. Therefore, through our initiatives to tax cross-border electronic services, we've managed to bring into the tax base non-residents. As at 2024, 55 were brought into the tax net, and they made a contribution of about 183 million kwacha. So efforts are again going beyond just the Zambian borders, because these are businesses that are providing a service to our Zambian consumers, and therefore they have created a taxable activity here in Zambia. Those are coming into the tax base. Then we are utilizing agency arrangements. I heard my colleague refer to the local authorities. So under the agency arrangements, this is where we've gone into partnership with the local authorities. We started with about 33 local authorities so that they can assist us to undertake compliance initiatives, particularly for the rental income tax. Again, research has shown that whereas we have a big number of properties that are on rent, maybe in thousands, but on our register, again, in 2024, we are around 18,000. Is that number really reflective of what is on the ground? So we've gone into partnership with the local authorities so that together we can see how we can bring more landlords onto the tax net. The other agency arrangement has to do with the appointment of agents to help us collect taxes. Commissioner for Domestic Taxes area referred to agents for the withholding of the mineral royalty. That's one. We also have agents for collection of turnover tax, the rental income tax itself also. So instead of us spending resources to look after or go after hundreds and thousands of these informal or small businesses out there, it's better we deal with this aggregator, and then that way we cut on the administrative burden on one side and also on the compliance cost for our taxpayers.
Mr. Kapasa, maybe just as you just hold that thought, I wanted to bring in Mr. Sigande. Mr. Sigande, I think a point that Mr. Mbambiko said, I think his opening remark was, you must make tax attractive for me to pay. Now, we look at the role of taxation in domestic resource mobilization. And can you just give us what that role is in resource mobilization and in promoting regional and intra-Africa trade? Because why must I pay tax? Why should I? What makes it attractive? Give me a reason. What is the role?
Okay, thank you. Thank you, Madam Moderator. We look at this in the context of customs as a tool for government's fiscal and trade policy. Now, when it comes to customs, it plays a number of roles. First of all, of course, it's a revenue collection in terms of trade taxes. Then because of our reorganization of our borders, we have been collecting now for even the local authorities to make sure that we reduce a number of payment points for people as they are coming through the borders, because they are used to go to a different payment points. So to make it more attractive, more efficient for them, because in the attraction, you have to simplify things for people to make taxes. So we do that, and a number of local authorities have appreciated our intervention and have recorded growth in their collections. So the other aspect that we are involved in the context of customs is enhancing domestic tax as revenue mobilization in meeting or contributing towards local revenue mobilization or resource mobilization. Now, how do we do this? In supporting domestic taxes from the custom points of view, we have mechanisms of trying to assist in the control or ensuring that we support the compliance through, we have advanced income tax at importation. So for those that are compliant, of course, and have a tax clearance certificate, it doesn't apply to them. As well as at export, we supporting the compliance or the controls in relating to controlling VAT fraud and also excise by doing validations at export. Then also in mineral export validation. Now, when coming to trade facilitation, how do we make it attractive in terms of compliance? We have segmented clients looking at their compliance behaviors into a number of segmented groups to help them or to help us treat them in a more effective and efficient way. We have a program that we call Authorized Economic Operator, that clients can come, we sit and agree on expectations and what internal controls are expected. We have another group, a segment called Customs Accredited Client Program, and another general one for large taxpayers. So it has been mentioned that we are focusing on large taxpayers. This is a short-term, quick win approach because of the inherent nature of the big clients. They're easy to deal with. They have governance system, internal controls. We want to quickly drive them into voluntary compliance so that we release resources. When they're doing things on their own, we just empower them. They go into the voluntary compliance and the cooperative compliance schemes. Then the resources that are released, because there will be no close policing of them, then we channel that effort that was focusing on them to the smaller taxpayers to help them in their compliance efforts through education, through various guidance that we can accord them. Then the other issues in trade facilitation or initiatives is coordinated border management, which we have implemented. At the borders, we have reduced the number of government agencies from 18 to 6. So that is also making it attractive for the traders to easily cross our borders without being inconvenienced with various agencies, each one trying to work or have their respective mandates with the importers. Then we are doing a number of one-stop border posts around, also in the effort to improve the facilitation. In addition, or leveraging on all this, we are using risk management in attending to our clients so that we don't have to check everyone, so that we are able to facilitate trade in a more efficient way.
Sigande.
Yes.
Thank you. Thank you very much. And it's important at this point when you're talking cross-border, the one-stop border post that you've established, because I'd like to bring in Mr. Munanda, who's from the African Tax Administration Forum. Mr. Munanda, the expansion of tax base, as we've heard, is a problem across the entire Africa, or for most parts of Africa anyway. What have been the findings of ATAF on these challenges, and any recommendations that you can provide to Zambia for us to navigate these challenges?
Thank you very much, moderator. And first and foremost, thank you very much, ZRA, CG, and your entire leadership for inviting ATAF. We are really honored by this invitation in this very first tax summit in Zambia. So we're really pleased for the invitation. Indeed, tax-based expansion has really been a topical issue across the continent. And this discussion has featured in many topics. Of course, the obvious one is taxation of informal sector, but there are also other things that emerge from that discussion. One of these is taxation of high net worth individual property taxes, amongst others. And therefore, when we talk about tax-based expansion, we also need to look at many other issues. But for now, we focus on informal sector. I think if we look at the statistics, particularly what we've been able to establish across Africa, less than 5% of the population is contributing to personal income tax. How does that compare to developed countries? In developed countries, that is more than 50% of their population. Out of that small population of African countries that is paying personal tax, more than 70% of that from our statistics comes from payroll taxes. And therefore, that's important statistics for us to keep in mind. And we are convinced that is why many governments, including yourselves, have started thinking about this topic and including measures, introducing measures such as presumptive taxes, turnover taxes, with a view, obviously, to address that gap. So the gap is very well known. So we've looked at several countries across the continent, about 20 countries or more actually have turnover taxes, presumptive taxes that are designed around, of course, a flat rate based on the revenue, or sometimes actually a progressive rate, which takes into account different thresholds based on the taxpayers. So that's what we have seen. But now, more importantly, the question that we need to address, are these measures effective? So there are three fundamental findings that we have observed from our study. One, what is the impact of these measures from a tax revenue perspective? The studies show actually those countries that have implemented these measures, they've not collected much. The collection is actually less than 1% of the total domestic tax revenue collections from about 18 countries. So not much of revenue is coming from there. Okay. Then the other observation that we've seen from this data is actually trust issues. The way these measures have been implemented have created issues of trust, i.e. taxpayers, of course, tax administrations are not having a very good relationship. And of course, that impacts, of course, tax morale and voluntary tax compliance. And then a fundamental one is the issue of equity. This data is showing that most of these countries that have implemented, they have realized actually many of the taxpayers that have registered, they are either below tax threshold or actually they are living even below poverty line in some cases. They have just complied for the fear of enforcement measures. And so the question is, are we enforcing these measures in a way that actually we disproportionately target low-income earners? What about the income earners that are actually within the informal sectors? The professionals, of course, big businesses such as in transport sector, construction sectors, and many of other companies that actually may not be informal, but actually formal, hiding within the informal sector. That creates a problem. So what is the way forward? Broadly, the way forward is to relook at the regime we have and ensure that we address those fundamental three issues, but even more specific issues that actually have already been commented by a number of us, one thing we need to have a targeted approach. A targeted approach which actually opens up the informal sector to see the various players involved in that informal sector and actually identify, more importantly, the income earners that are, of course, are in that informal sector. That is also bringing out the issue of, do we really understand that sector? Because that sector is not homogeneous, it's heterogeneous. There are different players in different businesses with different value chains. And therefore, it is recommended that we engage these sectors to understand them, and more importantly, work with the different regulators that are involved there so that they can also help us to inform, to enforce these measures. And then we also need to keep in mind that these measures should not disproportionately impact on the low income earners. And then I want to ride on two more important factors that have been alluded already. That is the issue of coordination and collaboration with various stakeholders, the regulators, the financial institutions, and of course the local authorities that can give us data, starting with the registration, payment transactions with these businesses, and that can be a very useful source of enforcement tool. The withholding tax mechanism, once the withholding tax reports or returns have been filed, that data is useful. And therefore, once we leverage on that source from collaborative approaches, we'll be landing somewhere. Finally, and critical, embracing technology. We cannot run away from that, and great work, CG and your team. Zambia is one of the countries we see moving on the right direction on the continent. Smart invoicing, electronic invoicing helps to deal with informality in a very big way. It enables transparency and access to data. The question is, what do we do with the data? So that we start using that data, and then we have great feasibility of different economic actors on our continent. So that's the right path, and we need to really leverage on that. And that speaks also to the issue with what we are doing with financial sector, including fintech, that is virtual payments. Are we thinking about getting data, whether it's real-time or near real-time, through those systems, including mobile payment systems? What information can we get there? How can we collaborate with those actors to be able to get, again, more information? Finally, stakeholder engagement, education, all those are important attributes. Let me stop there.
Thank you so much. Thank you so much, Mr. Munenda. Please give a round of applause for this panel. I really do think maybe the whole session should have been about this, because really that's what we've all wanted to know and all wanted to hear. And as I sit here as a taxpayer, this is very core to my heart. How do we widen the tax base? Thank you very much, gentlemen, once again. We'll now open the floor to 4 questions. Aha. I am going to start. Thank you, gentlemen. I do note, and I will come back to you. We might even take slightly more than 4 questions. I will give first preference. We do have a group of students in the house from the University of Lusaka. So I see a hand from there. Please, can we get onto your mic and ask your question? Introduce yourself and then ask your question.
Hello, my name is Osli. There's been mentioned that one way of expanding the tax base is by encouraging registration of the informal sector. And they mentioned, the people from ZRA have mentioned that smart invoicing has been one of the ways they have enabled that. My question is, has this implementation led to noticeable changes in the attitudes of this informal sector towards taxation registration?
Very good question. Maybe I will pass it on to Mr. Kapasa. Do you want to respond to that quickly?
Yes, we are seeing a trend in the responses that we are getting in terms of even newer taxpayers now coming onto our register. But just to mention that it's not going to take only one initiative for us to expand the tax base. We have a host of these initiatives that we are implementing so that they can complement each other. And those are some of the initiatives I was speaking to. But our key and flagship one, the smart invoice, because it has this rich data that then we are subjecting to a lot of analysis. We are applying it on the domestic taxes, we are applying it on indirect taxes and all. So it's about creating a rich platform that we've already done. We have a data warehouse known as the bulk intelligence data, and we are harvesting all this data that is coming through, and then see how then we can now apply this into our enforcement interventions. Thank you.
Thank you very much. Okay, I think the hands were okay. Zam and the gentleman next to him. Okay. Will we start with, who was first? Okay, Mark.
Yes, Kapumbe, thank you very much, gentlemen on the panel there. I think we're talking around the issue here. Kapumbe, you mentioned right from the start. What are we doing? What are we doing differently that we've done in the past to get to broaden the tax net? We're not doing anything. We had EFDs, electronic fiscal devices, where we were all, well, I say we, the formal sector or private sector, compliant. Now we've got smart invoicing. And unfortunately, the same people who are already compliant are being targeted. We know that. We know who the people are who are not compliant because we see them driving the big Mercedes and they are doing 800,000 turnover tax. Yeah, we know that as a public forum. How come ZRA doesn't know that? How come this is all new news for our tax revenue authority? I don't believe it's new news. We seem to be hesitant to go directly to these people. There are ways of doing it. I mean, just go to one of the shopping malls and try and buy a cell phone for whatever, how many thousands of kwacha and ask for a smart invoice. It doesn't happen. So we know where the problems are, but there seems to be resistance from our authorities to tackle these problems directly. We just put new labels on, new systems, smart invoice EFD before, smart invoice now, and it doesn't change anything. It's like a facade. So this meeting, this summit today was to find for solutions. We're talking about justification of the status quo. I haven't heard any solutions here. So my question to our officials from the Tax Revenue Authority, why are you so hesitant to attack the problem, to tackle the problem? Instead, we're going to those who are already compliant. There was a deadline set for the 31st of December with threatening of jail penalties for those who are not compliant. And we know that they're not compliant. There's examples out there. Have these people been arrested? Are they going now with jail sentences? What is happening there? So please, let's be factual. Let's not do window shopping or window dressing. What is being implemented to tackle the problem, besides from raising more taxes on those who are already compliant? That is my question.
Thank you, Mark. Next to Mark.
Yeah, thank you. Just a bit of a disappointment when I hear that, we're working with local authorities and we're trying to get them to be our agents to collect. You don't go the step further. It's like, putting someone and say, here's the ingredients for a cake, bake it, but you don't. Look at the Ministry of Lands, right? It's all digitized now, right? Why is a TPIN number not attached to the property? Go to ZESCO, 1 million. Why is a TPIN number not attached to maybe 200,000 of those that are consuming on a commercial rate? Right? You say you got 27,000 paying taxes. But why is the ZESCO's portfolio not being used to enhance your database? The same with land, council rates. Why is a TPIN not attached to the council rate payment? Because that will build you a database on two fronts. Who owns properties, what taxes they're paying, right? Then it will give you also a database of who is in business. Now, when you say, oh, we've given someone, we've given local authorities and we're working, they're going to be our agents, but we're doing it without being smart, right? And this is, when you talk about solutions, go the step further. Integrate the TPIN, right, to a ZESCO invoice, whether you want to buy units, integrate it to the Ministry of Lands. Yes, I go and pay my property transfer tax, I get a property transfer tax clearance, but it's not registered to the asset on the Ministry of Lands register. Same with rates. So if we really want to work around this, what I'm trying to get at is the ingredients to bake the cake sit in front of our eyes, but we refuse to do it. Going back to what Mr. Lowringer said, these are the things we need to address. And if we don't do it head on and smartly, we're going to come back here next year or in a next quarter and still be talking around these issues. Thank you.
Thank you. Maybe quick response to those two, and then we'll take two more.
Thank you so much. I'll start with the last one from Mr. Saga, I think. Thank you for the positive feedback. So what we are doing for accessing the data from the institutions you mentioned, in our corporate strategic plan, we've got one of our key strategic initiatives is to go for system interfaces, create these interfaces with other institutions. So we've started the process already. Our system is interfaced with a system at the Ministry of Lands. Then for the other institutions, if you look, for example, in our Income Tax Act, it lists institutions that are mandated by law to demand for a taxpayer identification number. In the past, enforcement has been a problem, but going forward, we've said these institutions have to implement this requirement. So if you want to have your power connected, you need to present a tip-in, and then for future transactions on that connection that you have, a tip-in will indeed reflect. Our teams are undertaking compliance initiatives to ensure that all those institutions implement this requirement of the law. And going forward, like I'm saying, the assurance and the smart way is to ensure seamless exchange of data. So we are interfacing these systems, our tax online system and all other systems that we use for our tax administration, so that we can have the seamless exchange of this data. Coming to the smart invoice, thank you so much. Indeed, punishing the compliant ones. We have a package for those that are not compliant. And indeed, the smart invoice is targeted at those that are not yet in the tax base and those that are not compliant. So penalties, we've started, and we've even actually developed the penalty regime on our system. Then we also have other measures like not to allow a claim that is arising from a non-smart invoice system. Other measures as about the structure, very important. So we are creating, in fact, we've created a dedicated structure that will be undertaking compliance for the smart invoice. So we will have an enforcement team to specifically undertake compliance activities for the domestic taxes. They will be checking who is not using the smart invoice, who is not issuing invoices, and all that. These are our teams that will be all over to try and check for those that give those options of whether you want cash, whether you want an invoice, and all that. So we have something, and it's coming for those that are not compliant. You can get that assurance. Thank you.
Thank you. Okay. I will be fair, and I will allow one lady at the back there, and then I'll come to you, Mr. Kashin. Yes, madam, over there in the middle somewhere. There was a hand. Yes.
Good afternoon, everyone. My name is Sanjay. I'm the tax lead for FQM Trident. Just to tackle on the smart invoicing, I think the focus has been on VAT registered suppliers, and I think that's where most of the issues are. But my question to ZRA would be, what strategy do you have to actually ensure compliance for those companies or taxpayers that are not on VAT? The other issue away from smart invoicing, we have noted that AIT has come in as part of expanding the tax base. But my question then would be for individuals, what is ZRA doing on the processes that will now allow individuals to claim back their refunds? Give and take, companies will get the AIT from the income tax, but for individuals, what strategy is there to ensure they get their refunds?
Thank you.
Thank you very much. I think mine on expanding the tax base has to be around consistency or over the long term. And I'll give you two examples. We're a group that runs a number of projects that span a couple of sectors. We are right now holding on to, tax incentives from the tourism world, which are useless pieces of paper because of the January, arbitrary draconian way of sweeping out essentially incentives that are given to institutions and companies under different laws for the, medium term, which by whatever operation, were completely just swept away. Now, if we have projects in the pipeline, we will shut down those projects until we see the way forward. Already there, one former taxpayer is actually shutting down on the possibility of bringing online new entities that will be paying taxes, because you've already shown them inconsistencies by grabbing benefits that come from other acts and essentially sweeping them out, whether that is by, arbitrarily classifying entities as turnover, tax, clients, taking away the VAT, opportunities and the income, tax threshold. That is more, fair for entities and for business people to be able to plan. Already there, you are trying to chase an informal, tax payer, but you are going to lose a couple of formal tax players who will shut down a couple of SPVs. Now, look, we talk over each other's heads when we do operations like the January, operation where you don't consult, going completely against your values at ZRA. I don't know even any of the values that you have listed, 4 of them, which one, goes, networking was not done because you should have been able to give a very clear, timeline of when you implement this, complete changeover and so on. What happens in the end is that when you put taxpayers, on the hard rock, expect class lawsuits, expect, litigation that might continue for the rest of this year and then taking us into a political year where perhaps, the table turns.
Mr. Keshan, can we allow them to comment now, please? Thanks. Please, you may. I think they're more for ZRA than the other panelists, unless you want to add something, Mr. Monand.
Thank you so much. I'll also share with the Commissioner, Sigande, if he has something to contribute on this. For the VAT register that we focused on this category, yes, because that's where the initial diagnosis was done. It's a tax type that was identified. It's supposed to, give us a lot of revenues, but in terms of what was coming in, wasn't much. So in terms of the phasing of this implementation, the target tax type was first the VAT. It's got much smaller population when you compare to the tax type. So we said, let's first go to this VAT. It's unique because it's an agency tax. You are collecting tax on behalf of government. And therefore, don't hold on to the VAT. Pass it over to the revenue authority and eventually to government. So the first implementation was more focused on the VAT. But along the way, we were still carrying on to also onboard taxpayers on the other tax types like the turnover tax, rental, local excise, and so on and so forth. As we now move to the other phases, you'll see us now upscaling in terms of the efforts to also now onboard for the other tax types. Just suffice to mention that for the VAT, we've even crossed the 50% threshold in terms of the population for the VAT. For the AIT refunds, yes, indeed, for tax, you need to pay the correct and fair tax. And therefore, we've put in place a mechanism to facilitate for the refund of the AIT that is recovered from one who is compliant. And I'm sure pretty soon our teams will share the precise process that one can follow. Maybe we are looking at the same process that we have for those that claim their unemployment refunds or those that claim refunds arising from donations that they make to charitable institutions. But there is something that we have in place. Commissioner Customs.
Thank you, Commissioner. Just to amplify or add a bit to, with respect to refunds, the IIT has been there, I think, over 15 years. So there are procedures for refunds that are in place already. What, with respect to those are importing, we would encourage them to take advantage of the process or the what is in place where you are supposed to do advance declaration or clearance. That way it will be easier for you to know what is required even before your importation arrives. So we're able to clarify or take into account what is required for you to have that waived before you do a final clearance at the border. Thank you.
Mr. Munanda.
Sorry, I'm going to deal with something slightly different, not specific issues directly to ZRA. And I want to address the comments made by the president of Association of Manufacturers. I think that was an excellent comment, and apologies when I talked about data, I should have expounded on the point because touches on what he said. It is true that we need to think about system integration. System integration is fundamental to addressing informalities. It's fundamental to addressing taxation of high net worth individual. He explained how we need to have a unique identifier, either is a TIN or a PIN, whatever identifier it is, and that needs to be sitting in different databases, and those databases needs to speak to one another. As long as we have access to that data, then the issue of technology checks in, how we use that data to target the right taxpayers and of course design the appropriate compliance measures for those taxpayers. So I just wanted to echo that because something we strongly advocate as a measure of dealing with this problem. Thanks.
Thank you very much. There was just some comments from Mr. Kashin. I'm not sure if you've fully addressed or.
Thank you so much. I had the question and it adds aspects of policy and it's something that we'll pick up in terms of engaging specifically bilateral with Mr. Kashin. Thank you.
Excellent. I will come round to your final comments, Mr. Mbambiko, unless it's very short and connected to something that's been said. Otherwise, we're going round for your final comments now.
Right. I think the quick comment I want to make is, the interface that I talked about between Ministry of Finance and ZRA. That interface is so key to help us so that the Ministry of Finance is not making policies which are very destructive. Currently, what we have, the January policies are destructive because one would like to think that there was no interface between ZRA and the Ministry of Finance. And I wish the Ministry of Finance was around here so that he would hear it for himself that it's critical that interfaces. He must not command, to operationalize before the board takes the time to investigate and come up with the better ways to do the taxes. That's the reason why we are saying from our side of the story, could we have the January taxes reversed?
So that was Mr. Mbambiko's wrap up. It's very clear. Taking you 1 minute. We are now rounding up. Thank you very much for the questions. I know there's a lot that's burning. I don't know to the ZRA team whether we are going to gather some of the thoughts, questions, comments from the audience. If there's a portal for that, I think that would be wonderful because I think people are going away from here with many recommendations that could be useful, many thoughts that we could maybe take upon and help to act and I think just allay some of the heightened passion that we've received from the audience. Please, 1 minute to wrap up for everyone. Thank you very much. What are your recommendations going forward on widening the tax base?
Okay, thank you very much. I feel the conversation has really circled around the IT and a little bit I think, neglected a little bit of actually broadening the tax. For us, I think one of the key things that I would like to mention is the digital economy, the digital market. We, as a country, I think we have not exhausted tapped resources in terms of taxation, the aspect of the digital market, the digital economy, in the sense that there are companies that have no presence in Zambia, physical presence in Zambia, but those services are actually being consumed here. And we believe that that's another area in which ZRA could actually broaden its tax base. As well as, I think, the inclusion that I mentioned, the inclusion of the local authorities in tax administration and management, we feel that that's another area which should be prioritized. Thank you very much.
Thank you. Mr. Kapasa, any final thoughts and recommendations from yourself or actions that you will be taking, perhaps?
Yeah, thank you, Madam Moderator. It's a pity we didn't have enough time to run through the many strategies that we have. But just to summarize that, in terms of the strategies, we have those that have to do with enforcement and those that have to do with supporting voluntary compliance. Enforcement is costly on both the taxpayer and also the tax administration. So what we are emphasizing on now is to support voluntary compliance. And therefore, last year, ZRA established a dedicated department to run with taxpayer education programs. So this is a department now that is all over, providing information and partnering with so many stakeholder associations so that we can give information and assistance to our taxpayers for them to comply with the many requirements that we have as ZRA. Last and most importantly, as we look at efforts to broaden the tax base, we want to appeal to our taxpayers to make voluntary disclosures where they think they have made omissions or where they think they have not complied with the tax laws. This is important because it helps to mitigate against potential penalties or interest. So please come through, make your own declarations or disclosures. We will attend to you and consider favorably any request that you may wish to make. Thank you.
Thank you. Mr. Munanda, closing remarks?
I think listening to the comments so far, one fundamental thing, we need to deepen stakeholder engagement as a country. As of course, as a ZRA with our stakeholders, the businesses, to understand them better and also see how we solve implementation challenges for different reforms. That's for me is a critical observation. Second, I think for informal sector, we certainly need to unpack, understand what is it for us as a government. Is it, of course, the mining sector, which is big there? Is it, of course, the retailer distribution? And once we understand those businesses, then we can have targeted solutions for them because they are not the same. And more importantly, let's make sure that those policies, those administration reforms are targeting the real taxpayers and not to overburden those are not supposed to be targeted by the solution. And then lastly, I think technology is a solution to very many things that we are thinking about here. And therefore, if we have the right systems and have the right integration of those systems that they can speak to one another, then after that, use the data effectively, then we should have more targeted compliance solutions that can address all these problems. Thanks.
Thank you very much. Mr. Sigande.
Thank you. Just to reemphasize that all efforts are being put to make the payment of compliance attractive. There are a lot of interfaces internally, externally, even at international level to enable seamless movement of information. And also we're implementing the ZRA one ZRA policy that we have 360-degree focus on a particular client. So a number of other processes are being simplified and no client is being left behind, especially the SMEs, those that are coming at the moment by passenger or by buses, they're able now to declare clear in advance while they're out of the country, so that when they arrive at the border, they spend minutes instead of the whole day they have been spending in the past. Thank you.
Thank you very much. Please give a round of applause for this panel. Thank you all for your participation. I think from the audience, thank you very much to you as well for being very involved in the interactions. I would just, as I suggested, maybe to the ZRA team, perhaps it's an opportunity for us to get more information, more recommendations from members of the audience. But for us, I think this was the last plenary session. So thank you very much, and I'll hand back to the Director of Programs.
Thank you, Chair. Before the panel leaves the stage, we'll just ask before you leave the stage, with your permission, we'll invite the Commissioner General and the board chair to just give quick interventions over the submissions that have been made. Yes.
Thank you very much. The first one for me is to just thank the governing board, the chairman and the members who are here. And most importantly, thank all of you for the valuable contributions that have been made in this session. Also want to thank the panelists for the 3 sessions and the moderators for the wonderful session. From ZRA side, we would want to assure you that this is not the end of our interaction. We will continue to engage. And I believe I've already asked our team that we will set up a special email on Tax Summit so that those who still have contributions can submit, and we should be able to receive the various submissions. And just to assure you that there've been very good suggestions session. And from ZRA side, we have a corporate strategic plan, which we just extended for 2 years now to go from 2025 to 2026. And in the development of that plan, we consulted a number of stakeholders. You provided your input, including some of the submissions that are being made here, particularly those relating to expansion of the tax base. So we'll have a session in March to launch our corporate strategic plan. And please pay attention to that so that you see that some of the solutions, particularly to address the topical issue, especially of expanding the tax base, are catered for in that corporate strategic plan. But for now, thank you very much for participating. And I would like us to maybe clap for ourselves. This has been our inaugural session. Your participation has been very, very impressive. And also want to thank some of our colleagues here. I know Anton came all the way from South Africa. He's going back today. Thank you, Anton, for coming just for this session. And thank you to ATAF. Thank you very much. Thank you.
Ladies and gentlemen, another big round of applause to our panelists. And we'd also like to thank the Chief Executive Officer of the First National Bank, FNB, Ms. Kapompe Chola, for that well-coordinated panel discussion. Thank you so much, Madam. She calls herself Kopala. Anyway, she did it her way. The board chairperson, the vice, Commissioner General, invited guests, leaders of the different sector players or stakeholders, members of the media. Would like to once again thank you so much, as has been echoed by the Commissioner General, the board chairperson, and speakers that were on the panel. Would like to thank you so much for your participation at the inaugural ZRA Tax Summit. We will have another one next year, of course, as committed by the board and management. I've been your host, together with the other moderators. Would like to thank you so much for your participation. We also have, we know that this is after our lunchtime, so we do have lunch. We'll have a team that will guide. We'll have 2 groups. So the other group will be downstairs and the other group will be upstairs. So we'll have a team that will guide us. So please join us for our lunch. We'd like to thank you once again for your participation and wish you a pleasant day. This marks the end of the Tax Summit. Thank you.
I think neglected a little bit of actually broadening the tax. For us, I think one of the key things that I would like
Get some water too.
Office. Yeah. Up to the end of the night, Get card.
And those businesses, then we can have targeted solutions for them because they are not the same. And more importantly, let's make sure that those policies, those administration